Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good. मैं तो हमेशा मस्ती रहता हूँ. Welcome. Let us start our. क्या करो? You say whatever you say. I'll start. Exemptions we have to start. No. Stock market we have to start. No. I am doing second of what? 54 series. 54 series exemptions. अच्छा. I thought it was for me. You could have lied also. Section 54 series ka exemption. We are done with the first section which lays down the roadmap which explains what is 54. The whole series has this thing in common. You transfer one asset and with that money you invest in another asset. The investment in the new asset will be subtracted from the capital gain of the old asset. We have done the most popular of all. Sell a house, buy a house. A quick recap, because you know what, 54 only is going to be repeated. Just slight conditions are going to change. Everyone is with me? So very quickly, section 54. You. Individual HUF. What great thing you did in your life? Transfer of residential house, which was a long term capital asset. You want exemption? To do what? Acquire another residential house. Exemption will be for maximum one. In India, next to each other will be considered as one only. However, once in a lifetime, you can take two at separate places also if the gain is up to rupees 2. Purchase within 1 year before or 2 years after. Construct within 3 years after. If you fulfill these conditions, then the investment or capital gain, whichever is lower, will be your exemption. However, do not transfer your new asset within a period of 3 years. If you do that, then the gain exempt earlier will now become taxable by minusing the exemption from the cost of acquisition. And we also studied that before due date of return filing, invest in capital gain deposit account scheme, take your exemption, and between that date and the time limit of the section, use that money for acquiring the asset. Unused balance in the year of expiry will become taxable capital gain. The crux is going to remain same. Section 10 exemptions are fully exempt. You don't have to calculate direct nil, but here we have to calculate and subtract our investment. Correct hai? Next section, section 54B, transfer of urban agricultural land. And I want to make it clear that this transfer will exclude compulsory acquisition. Two things I want to make clear before I actually start the section. One, why am I taking urban and not rural? Why am I taking urban and not rural? Because rural is not a capital asset. What is 54 series? That to get exemption, you have to make investment. But in rural, where is the question of exemption? Capital gain does not arise only. So rural is not in our discussion anywhere. Correct? Second thing, why am I excluding compulsory acquisition? That is a transfer, no? But that is exempt without any investment under section 1037. See, whatever is section 10, no? Section 10 does not require you to make any investment. Section 10 means blanket exemption without making any investment. So therefore, compulsory acquisition, which is already exempt, remember, compulsory acquisition of urban agricultural land, long term or short term, it will be exempt for individual HUF if used for agriculture for minimum 2 years. So compulsory acquisition is already exempt. But sale is taxable. Go check 1037. Did we write there sale is taxable? So if you, now please pay attention, if you sell urban agricultural, sell, not compulsory acquisition, sell urban agricultural, capital asset? Yes. Taxable transfer? Yes. Capital gain has arisen? Yes. 1037 is applicable? No. Because it is sale. So is the capital gain taxable? Yes. You want to save tax on that also? So make an investment and we will subtract that investment. Understood? Can we go to the conditions? First, this exemption is for which assessee? First point, in fact, all the head points are same. Only the data will change. Here also it is individual HUF. And by now I will avoid purposely confusing you. You understand? Anyone can buy or sell. Exemption will be only for individual HUF. Same as 1037. And that also if you have done minimum 2 years agriculture. Individual HUF who has done agriculture for minimum period of 2 years. Can I say same as 1037? So that way, if you understand, in 1037, if it is compulsory acquisition, direct exemption, and if it is sale, then 1037 is not applicable, but you make investment and still take your exemption. Second point, you remember the head point? The asset which was transferred. Here it can be long term or short term, that means this exemption will be given against both capital gain. If you learn on comparative basis, is the assessee same as 54? But asset transferred in 54, it had to be long term. This capital gain exemption will be given whether it is long term or short term. Correct? Third, how will I get my exemption? What do I have to do in section 54 to get my exemption? Acquire residential house. Here you will have to acquire another agricultural land. Here they say what? Acquire another agricultural land. So what is 54? Sell a house, buy a house. What is 54b? Sell agricultural land. Sell, not compulsory acquisition. And buy another agricultural. There was controversy in 54 when one person sold one house and purchased two different houses. The first court said both allowed. Then finance minister changed the law, said only one allowed. Then as a lollipop they said once in a lifetime two allowed. But in agricultural land cases, please understand, you will never find one person selling one big land and buying two lands. If he has to do agriculture, he will do everything at one place now. See, the probability of you, I am not saying it is impossible, but the probability of you selling one land and buying two lands is too less. No one ever has claimed exemption of two lands here. And therefore, this another for now remains one only, even if the clarification is not given. That is not a bigger problem here. There is a bigger problem than this also. Please identify that bigger problem. That singular plural is not a problem. In 54, it is specifically mentioned. Here it is not mentioned, but you will not get to see one person buying two lands. If he has that much budget, then he will buy at one place and do the agriculture at one place only. Find out another big controversy. The new land that has to be purchased has to be agricultural land without any specification of whether it is urban or rural. See, in the asset transferred, they are specific because rural can't be. But in the asset acquired, they are not mentioning anything. That means if I sell urban, sell rural, I am not asking. And compulsory acquisition also I am not asking. Sell urban and buy urban, I will get this exemption. Yes, if I sell urban and buy rural, will I still get the exemption? Yes, because of a loophole in the law. Yes, it is a loophole. They have to be specific. Sell urban agricultural land and buy urban agricultural land. But they are not specifying. They are saying buy another agricultural land. So one more clarification or one more time I make it clear. Can the new land be urban or rural? Yes, it's a loophole. Yes, this will result in loss of revenue to the government. How that loss will happen, I'll explain in the next few minutes. But one thing is clear, that the asset sold has to be urban. Rural can't be giving rise to capital gain. And the asset purchased can be urban or rural. Is that clear? Chalo, fantastic. Now what? Come on. Fourth point, no one. What is the time limit? See, there it was purchase or construct. Correct or no? Because it was residential house. So there was one time limit for purchase and another for construct. Do you understand what is the new asset that we are investing in here? That can only be purchased. You can't construct land. Who are you? Vanar Sena? Vanar Sena, you know? धन्य है वो वानर सेना जिसने सेतु को बना दिया. You heard this line? I only told you about it. Then suddenly you realize, अरे it is that song. लिख कर नाम राम पत्थर पर पानी में था फहरा दिया. Now you remember Rama Setu. You construct land. How you construct land? I want to know. Don't say it's a new road. But on that existing land, how do you and where do you construct land? In the air, on water, where exactly? So land can only be purchased. There is going to be your date of transfer, which has to be during 24-25 for it to come in your exam. From that date, within a period of 2 years. So here there is only one time. See, please understand. 54 there were two time limits, no 2 years and 3 years. So in capital gain deposit account scheme, to make your unutilized balance taxable, we have to wait for 3 years. We won't make it taxable after 2 years, giving you the benefit of the doubt that construction can still be completed in 1 year. But here there is only one time limit. So of course, here you will sell. Before the due date of return filing, you will put the money in CGDAS. Between this date and this date, you have to buy your new land. And in this date, whatever is the unutilized balance in CGDAS, that is going to become taxable. Long term or short term, bro, based on original gain. If this was long term, that will also be long term. Short term to short term. Understood? So what is the time limit? Purchase within 2 years. You. What great thing you have done in your life? Transfer of urban agricultural land other than compulsory acquisition. How to get exemption? Invest in another land which can be agricultural land in urban area or rural area within a period of 2 years. Then what will be your exemption? Tada! Investment or capital gain, whichever is lower. However, please do not sell the new land up to a period of 3 years. Lock-in period, same. Head points were the same in ABCD also. Only answers were different. In EFGH, remember that? EFGH, same is going to happen for all the other sections. We'll do it together later. What was G? Contravention. If contravention takes place, then gain exempt earlier now becomes taxable by reducing it from the cost of acquisition of the. While this is same, but there is here a twist where I told you government will lose some revenue. I buy urban agricultural land. Sorry, I sell urban agricultural land. With that money, I buy urban agricultural land. I take exemption. I have to lock the new asset for 3 years. During 3 years, if I sell, then that's contravention. I'll compute capital gain on that land sold. Then from the cost, I will minus my exemption. No problem. Supposingly, I pay attention to this. I sell urban and buy rural. Can I claim exemption? Yes. But the new land has to be locked in for 3 years. During those 3 years, if I sell, is that contravention of lock-in period. So we should pay tax on two gains: new actual gain and old reversal of exemption. We are taught one calculation which includes both, minus from cost. But that won't happen because the new land is rural and therefore not a capital asset. If sold during lock-in period, it is contravention, but we won't calculate only. And if we don't calculate, so there won't be any capital gain on new and there won't be any reversal of old. This is where government will lose for this loophole. If new is rural, there will be no calculation. If new is rural, there will be no calculation. If new land is rural, there will be no calculation. Understood? Otherwise, it is same. But this is one loophole. Of course, some of you tax planners already have an idea. I'll tell you what is your idea. Because you don't know yourself as well as I do. Sir, that means I will first buy urban agricultural land, doing urban area agriculture for many years. One day I sell. Will that be capital gain? Yes. How to save tax on that capital gain? Buy land in rural area. Will I save tax on that? By making the investment. And very next day, I will sell the rural agricultural land. I have contravened the lock-in period, but there won't be any calculation. Therefore, I don't have to pay tax on the gain of the new land and I don't have to reverse the exemption of the old land. Sir, I got the game here. Sell urban, buy rural, and next day sell rural. Yes, you got the game. But do you really think it is a game? You understand we are talking about buying and selling of agricultural lands? Only immovable property. Non-agricultural land also, buying and selling is difficult. Try buying or selling any immovable property, and see how much time, effort, energy, money it takes. Plus, here we are talking about agricultural land. You should know this, that everyone is not allowed to acquire agricultural land. Only two types of people are permitted to buy agricultural land. One, if you are legal heir of the farmer, then you can register that land in your name as a legal heir. Or if you have farming license, if you are a registered farmer with the government, then you can buy agriculture. See, not all of us are legal heirs of farmers, but we can get farming license. In our CA firm, we make farming license also if anybody is interested. See, we make farming license, we give disability certificate. We, if you want to take high value insurance policy, we make your death certificate also if you want. ठीक है चलो farming license we can make. For example, Amitabh Bachchan sir, a very very poor farmer from not Allahabad anymore, so they call it Prayagraj. He is a very poor farmer, and I am talking about Bachchan sir because celebrities know we can bash them publicly. Otherwise, in Maharashtra we have a very very poor farmer from Baramati district of Maharashtra. Very very poor farmer, very poor. He's so poor that when you go from Mumbai to Pune express highway, so you will get land on the right side of the highway and left side of the highway. Full land belongs to him from Mumbai to Pune. But see, he's so poor, he has land only between these two cities, which is such a small route. Had he been rich, he would have land between Mumbai and Delhi. No? That's called being rich. Mumbai, Pune is such a short distance. Only little land he owns. You know, Baramati district of Maharashtra. No, I haven't named anyone because I don't want a situation where tomorrow you bring some people with you because some are waiting only for an opportunity. Okay, Kaire, huh? Check the recording. I have not taken anybody's name. I am not even saying it's a politician. I am not even saying that it's a politician. है ना? So bro, only these people who either have farming license or are legal heads of farmers are allowed to buy plots. By the way, I must tell you one more thing. If you see ever newspaper advertisements of plots on sale available on highways, highway land, it's cut into plots and those plots are available for sale. In the advertisement, they write NA plots. So I want to make it clear that the advertisement is not teasing you. Okay, garib, NA not applicable to you. You think that the ad is teasing you, that you are so poor, they are writing agricultural land on sale, but NA, for you it is not applicable. No, they are not teasing you. They are not saying not applicable plots. They are non-agricultural plots so that anyone can go and offer them. Not everyone is allowed to buy agricultural land. As simple as it may sound, you can't sell urban agricultural land, buy rural, sell again rural on the next day. It may sound like a game. It is not a game. I hope we are clear on this. And of course, CGDAS also same. So believe me, effectively in all the sections it is like this only. What? Everyone with me. E, F, G, H, same. Only because of this one line I actually did them separate. You will ordinarily find me doing like this. I have to teach you only ABCD, and ABCD also the internal answer because head points all 8 are same. This, ladies and gentlemen, is your agricultural land. So this is how the exemptions are progressing. Sell a house, buy a house. Sell urban agricultural land, buy any agricultural land. Like that, we will just complete the remaining sections. The next, which is in your syllabus. So all of them are not in your syllabus. 54D. Compulsory acquisition of industrial land and building. With a lot of excitement, you have set up a factory. So there is factory land, factory building. You are so happy. But the problem was that day you could not break the coconut in your first try. So it was a very, very inauspicious moment. Huh. Even if you are a CA background person, no, coconut should be in first attempt. Huh. It was inauspicious. Compulsory acquisition of industrial land and building. Compulsory acquisition of industrial land and building. After starting your factory, within a few days you get a notice. Bro, you are gone, bro. Teri to lag gayi. We want to make a bus stop here. We want to make a metro station here. Get lost. What do you guys call it? Poda? We here call it one task. What do you call it? One task की गोली. नहीं. Shall get lost. Get lost. Everyone understands common terminology. खाली कर. Does the government have right to do that compulsory acquisition? Yes. But of course they have to pay you compensation. You want to guess what should I do with that compensation money? Bring the money home. क्यों पैसा पैसा करती नहीं? Guess what should we do with that compensation money? Set up my factory at another place, buy a new land, new building. Correct है? Government wants that location, no? Obviously, I will have to buy at a new location because if I was not Vanar Sena who can construct land, I am not even Hanumanji who can take that building, factory building to another location. That new location I will have to buy only. No, Hanumanji was blessed with Ashtasiddhi. Are you aware? You are aware what is Ashtasiddhi? He had the ability to make himself in size very small. So in that small size, he did a complete survey of Lanka. That which are the places which I will set on fire. You can make yourself very big in size is how he could cross the ocean to go from India to Lanka, current present day India and Sri Lanka. That is known as Ashtasiddhi. Bro, you have one Siddhi also. He had 8 powers. You have one. Just asking. Nahi na. So you can't take that land from one place to another, no? Or that factory. You will have to buy another. And that's the crux of the section. The compensation money has to be used to buy industrial land and building at a new place. Whatever you invest in the new place will be subtracted from the capital gain of the old industrial land and building. Understood or no? Bas. Now that we have understood the section, quickly we will finish off the points. I want to give you the opportunity. And you guys are also aware that only ABCD ka answer will change. Because everyone with me. 1, 2, 3, 4. E, F, G, H, same. So ABCD ka answer only you have to try. Try to. Company, firm, LLP, AOP. Individual can't have factory, correct? क्या है? पागल है? You consumed your own stuff. Individual can't set up factory. Individual can't have factory, land and building. Huh? Think about it. Think about it. Anybody can start industry and the government can take away your land. No. Why only company? Why only? One by one you were saying everything. Company, firm, AOP. But individual can't have factory. Are? Learn to question. Otherwise your seniors in articleship will put that gobar in your brain. And one of the biggest mistakes, I always say writing practice ka shortage is a big mistake. One of the biggest mistake at CA final is choosing coaching class on the basis of followers on social media. Learn to question. Just watch for 1 hour, no, bro. You can't invest that much for your CA final degree. You will get to know the difference. No? I am saying, individual can't have factory. Individual can't. Before saying yes for something, just tell yourself what you are saying yes for. Saying yes without thinking can be dangerous. Huh? Keep on saying yes. Huh? You are doing CA. Your name is Pratik. You are Jadhav. You are a drug seller. Now how you... In fact, this is something the answer should have been yes till you said no. You have to be careful before saying yes. Bro, I'll tell you what, she is never going to say yes. Be careful before you say yes. Can individual also have factory? Yes. Yes, this yes was correct. Yes. So all assesses. Are we clear on this? Chal. Next. The asset that you have transferred. Your land and building. 54, it had to be long-term capital gain. 54B, it can be long-term, short-term, both. What about year? It can be both. I'll tell you reason. Reason number 1. Land is a non-depreciable asset. But this is factory building, depreciable assets, so always short-term. So building ka to capital gain. If it and industrial land and building is depreciable. Depreciable asset, but deeming fiction, always short-term. Second, Second, forget about the deeming fiction, forget about the holding period. It is possible that yesterday you started the factory, but because you could not break the coconut in the first attempt, today you got the notice. Bro, the guy who sold it to you sold it very smartly at a very low price. He did not actually sell it. In Mumbai, there is a term, chipka diya. I can't even translate. Sorry. He fooled you. You understood? So it can be short term also. Clear? Chalo. Next. How to get exemption? I already discussed. Invest in another industrial land and building. Correct hai? Next. What will be the time limit? We are granting you a total period of 3 years. Everybody please pay attention. 3 years. See, in 54, we had to do two things. Either we had to purchase or we had to construct. Purchase or construct, two options. So for purchase and construct, we gave you separate time. Now, 54B, it was only land. So there was no question of construction. Whatever will come, it will be only purchase. We gave you 2 years, only one option. Now here there can be land or building. So instead of making it complicated to give you separate time for land, separate for building, we are giving you total time of 3 years. In these 3 years, you buy ready-made land and building. You buy land and construct building. Do whatever you want to. Your acquisition should be closed, completed by the end of 3 years. But from the date of compensation. In all the sections, the time limit of buying the new asset starts from date of transfer. But in cases of compulsory acquisition, the capital gain itself gets triggered only when you receive compensation. So the investment ka time limit will also begin from, not from transfer date, but from receiving compensation. And common sense, if I don't receive compensation, what will I invest? Agarbatti. To invest, you need to get, to invest, you got to have a physical possession of that compensation. No, your time limit will commence from compensation. Understood, everyone? So instead of your one industrial land and building, you are acquiring another industrial land and building. Because if this is clear, so everyone with me, on your mark, get set, go. What? E, F, move your body also. E, F, G, H, same. Quantum, whichever is lower. Lock-in, same. Contravention, same. CGDAS, same. Same, no? Between this date and due date of return filing, invest in CGDAS, and between that date and this period, kya bro? Purchase. ये clear hai, everyone? Fantastic. Section 54 EC. Hello. After D we have EC. Transfer any latka. I don't give full form. Everyone knows. Any long-term capital asset. This is how will I get my exemption? Invest in, please pay attention, this is where the logic is hidden. Invest in bonds of the following organization. There is an organization called NHAI. I am speaking the full form. Let the short form remain in your notes. And of course, in the textbook, full name is written. Just listen to the name. National Highway Authority of India. Bonds of NHAI. NHAI stands for National Highway Authority of India. You want to guess what NHAI does? Makes national highways. Then there are bonds of another organization, Rural Electrification Corporation Limited. What is this organization? Rural Electrification Corporation Limited. What does it do? It provides electricity in rural areas. This builds national highway. This supplies electricity in rural areas or any other notified organization of the government. And over the years, government has still notified two more organizations, there is an organization called PFC, Power Finance Corporation. What does it do? It provides finance to companies in power generation business. It is in lending business. And IRFC, this company came with IPO also a couple of years ago. Indian Railway Finance Corporation. What does this company do? You want to guess? Provides finance to Indian Railways. Very smart. Kya smartness hai bro. I am really so proud to have you in my class. I have not seen so many smart people before in my life. And you are shameless enough to also say thank you to this. Good. Much appreciated. These small things in life make life beautiful. Baki to kya hai? Everything is complicated. You know? These are government organizations which need money. NHAI, RECL, PFC, IRFC. If they have money, they can do their business. Anybody can do business if you have money. The problem is that in these organizations, when we want your money, we don't want to give you too much of equity. If we give you too much of equity, then you will start controlling the organization, which we do not want. So what is the only way of raising money from the public? Bonds. But public is not interested in these bonds. One reason, government rate of interest is very less. Second reason, the interest that they are already giving very less, that is also taxable. So after tax, you still get further lower amount. Post-tax returns, we call it. You know, there is something called EBIT in financial statement, and then after we subtract interest and tax, we are left with NPAT. The NPAT is too less here. Further, bonds are not eligible for indexation also, in case I ever sell. While government desperately needs this money, like literally they are begging that please invest in these bonds. People are not buying these bonds. So government got an idea. Then you transfer any letter. So you will get long-term capital gains. You want to save tax on long-term capital gains? Buy these bonds. Whatever you invest in these bonds will give you exemption. You understand? You understand? In fact, no matter who you are, we will give this exemption to all assessees. Whoever you are, we will give you the exemption. So listen, you are anyone, sell anything, and there is long-term capital gain. So do what? Invest in these bonds, and investment in these bonds will be adjusted. When first time I studied this section in my life, 2007, when you all were newborn babies, I studied this section first time in my life in 2007. And I had a strong objection on this section, to this section at that time itself. Dear government, are you a beggar here? You are requesting, please buy my bonds. Then beggars are not choosers. Beggars don't have options. You give a beggar 10 rupees, the beggar can't say, nahi, give 20. Or walk away. Nahi. In Hindi also we have a proverb to refer to this. Bhikhari ko bhik, jitni mili theek. As a beggar government, how can you put a condition on me? And that day I used to tell my friends, that day when I become the finance minister of the country, very soon it is a matter of time. Talks are going on. Announcement can come at any time. I will still complete CA. I will still complete CA. That day, I will make this any asset. You understand? You need money, no? So open more options for the assessees. Why are you giving the exemption only against? Give exemption against both. Open more options. Do you agree and understand? But this government has not changed over the years. Rather, because of only long-term also, so many people wanted to save tax. You know, I sell jewelry, I want to save tax. I sell shares, debentures, long-term capital gains happen on all the assets. The day-to-day assets also people are selling and buying these bonds. Now these organizations already have received too many funds. Now government is like, now we don't want your funds. It's been so many years, more than a decade. So they are now, rather than relaxing the provision, they are restricting the provision. Some years ago, during auntie's tenure only, auntie changed it to, now any long term will not be allowed. The asset has to be immovable property. Means now buying of bonds against capital gain of shares, debentures, gold, jewelry, etc. no tax benefit. The asset that is sold has to be long term, and further restriction only immovable property. This can now define for me my point number B. Asset transfer has to be long term, long term, long term, and that also it can be land, building, or both. It can be only immovable property. It can't be any other asset. It can't be any other asset. Understood? So you, all assets. What great thing you've done in your life? Transferred an immovable property which is long term. Now see, I sell a house and I buy a house only, then I can get 54. I sell an urban agricultural land and with that I buy agricultural land, then I can get 54B. But bro, if I sell a normal land, non-agricultural land, I can't get 54. I can't get 54B also. I sell my house, but I have got no plan of buying another house. So, I can't get 54. Obviously, no 54B. But I can buy these bonds and save tax. You understood? What is the time limit? 0.4 is time limit. You understood? Transfer any immovable property which is long term and acquire NHI, RECL or notified bonds. Now this time it will be date of transfer. Compensation is applicable only in compulsory acquisition cases. From this date, 6 months. Please understand, in all the other cases, the asset that you are acquiring was immovable property. Go check. Go check 54, 54B, 54D. You have to acquire immovable property. These are bonds available in the market. You have to go to the market, buy and come. 6 months is also very heavy. You don't need more than this. You can very well reduce it as well. 6 months, more than enough. So these bonds have to be invested in within a period of 6 months. If you do this much, then ladies and gentlemen, investment or capital gain, whichever is lower, then sir, why are you not doing it like this? Tongue. Because there is a catch here. Here, the maximum benefit will be 50 lakh rupees. This condition is not there anywhere else. In 54, it is there. But I told you that there is a relation between 54 and 54F. I will explain together. I am waiting for 54F, which is the next section. I'll do it. But here you can directly understand. Supposingly my capital gain on immovable property long term is 2 crore. I can buy bonds of 1.5 crore, 2 or 1.5, whichever is lower, 1.5, but that cannot be more than 50 lakh. Exemption can be maximum 50 lakh rupees. You cannot take more than 50 lakh exemption. In whichever is lower also, the lower amount also can't exceed 50 lakh rupees. What is F? Lock-in. Lock-in is also same. Means meaning of lock-in is same. But there are a couple of points that I want to tell you about this lock-in. Because it is not completely same, no, we are not doing that. There are certain changes, small changes. Like there is limit of maximum 50 lakh. In lock-in, they have said on or after 1st April 18. You go and check the calendar. Today is after this date. The lock-in period is going to change from 3 years to 5 years. Very smart there. See, when they are giving you benefit of immovable property, they are giving you lock-in of 3 years only. Because in any case, in 3 years, it will be difficult to sell. You can't be selling immovable property so easily, but bonds can be sold easily. So people are just waiting. That day when the 3-year period gets over, very next day they are selling the bonds to liquidate the cash, to generate the money. Bonds ka lock-in will be 5 years. And second, very smart there. In all other sections in lock-in period, they had said in 3 years you can't sell. Here they say during lock-in you cannot. Everywhere else, what have they said? Sell. Here they say cannot convert into. You cannot convert into money in any form. You cannot convert into money in any form. Means I sell my property long term. I buy the bonds. I have taken exemption, maximum 50 lakh. Now what I do? I know that 5 years I can't sell these bonds. I pledge the bonds, mortgage the bond, hypothecate. I take a loan by giving the bonds as collateral security. That means I am not keeping my money invested. You understand? I am buying the bonds with cash and immediately liquidating the bonds by not selling it, but by taking a loan against it. And one fine day when my lock-in period gets over, bank I will tell, sell the bonds and liquidate it, keep the money. Because I have already from day one received the money from the bank. So that means I am not keeping my money invested in the bonds. I am converting into money immediately. Not allowed. Cannot convert into money in any form. Is that clear? So, normal sections during lock-in, you can't sell your asset. But in this section, during lock-in, forget about sale. You can't pledge, mortgage, hypothecate. You can't do anything. Sir, then, immediately a good student will ask a question. Sir, supposingly I sell a house and then I buy a house. So, in 54 also there is lock-in period. What is that lock-in period? 3 years. During those 3 years, sir, can I take a loan against my property? In that section, prohibition is only sale. So, yes, you can take loan. And I'll tell you what. From day one itself, there is going to be loan on that property. Think about it. The new property is always going to be expensive. The investment will generally be more than the selling price of your old asset. So invariably there is going to be a bank loan. Even before you get possession of that new property, it is likely that the property is already hypothecated to the bank. You've taken a mortgage loan against that property. So in properties, it is allowed. Only in bonds, you can't take a loan against them and therefore cannot convert into money. Got the point, everyone? If I do contravention, this is absolutely same. So, gain exempt earlier now becomes taxable by reducing from cost of acquisition. And what is my last point? Not applicable here. Use your brain, common sense. Why? Why? When will you change your habit? Say it with confidence. The time is only 6 months, bro. You understand or no? Time is only 6 months. And I'll tell you what, if I am doing my transfer of property which gave rise to capital gain somewhere at the beginning of the year, the 6 months will get over within the financial year. Forget about assessment. When we have 2 years, 3 years, no. Then we have to give you that facility. In 6 months, you don't need that facility. Bro, 6 days are enough if you understand. Correct or no? Fantastic. And this brings us to section 54F, which happens to be the last section under your exemptions, with which exemptions also will get over. Okay. Section 54F. Somebody who already has a house. See, this is the logic. If you know the logic in advance, points will become very easy. Somebody who already has a house and wants a better house. So you sell a house, buy a house. You are covered where? 54. But will there be some people who have investments? Beginning of your career, when you start earning, you will be buying insurance policies. You will be buying SIPs, mutual fund units. Little liquidity you will get. You will buy some equity shares, maybe crypto investment, maybe you'll buy gold, because these are assets which are available at small amounts and quantities. Beginning of your earning life, you can't be making investment in immovable property. Investment in immovable property will require approximately a decade. Mumbai city, 1.5 decade. If in 1.5 decade you are able to buy property with your own funds, zero inheritance. With inheritance, you can buy in 1.5 days also. 1.5 decade, you are able to buy immovable property with your own fund. That means you're doing it. But life insurance, first month income you get, no, first time you get income in your life, no, that day should start. SIP, investment in mutual funds, systematic investment plan, keep on investing. The power of compounding you won't realize. Equity with very, very care. And except F&O, I am talking only about investment in equity, not trading in equity. The earlier you start, you can start building your corpus as soon and as early as possible. Because these things, gold also, you have 5,000, 10,000 per month budget also, no, you can do that investment. But property, you can't invest in 5,000, 10,000 per month budget. Property, to home loan ka EMIs will go to 40, 50,000 rupees, 1 lakh rupees per month. So beginning of your career, you have invested in all these assets like gold, shares, debentures, everything. You have all assets. God has blessed you with everything. You are just missing that one person, that one asset in life. That one asset, your dream home. God has blessed you with everything. You have gold, you have shares, you have debentures, you have jewelry, you have mutual fund units. Your net worth is good. You think this is now the right time to, remember, uncle, can I call you daddy? This is the right time to buy your house. By the way, I must tell you, the moment you take that decision, whatever you have to be prepared to wipe it. Asset zero plus liability because bank loan. So one thing is for sure that you will have to, have a completely fresh start now when you are planning to buy that house. That means, can I say I will have to liquidate most of the assets that I have? That will result in capital gain. Now, it only makes sense that if this liquidation was done to make your investment in your first dream house, so we will allow you to take that exemption. When you sell a house, buy a house, you get covered under 54. When you sell anything other than house, shares, debentures, gold, and that money you invest in house, means the asset purchased here is same as 54. But the asset sold, there it is house, here it is anything other than house. Transfer of an asset, but most importantly, other than residential house. See, the whole idea of 54F exemption is that you are someone who does not have any house. You are someone who does not have house. If you have house, then sell house, buy house. If you don't have house, then this section will come for you. So what have you sold? Anything other than residential house. And what will you use this money for? To buy that dream home. So that way, can I say 54, 54F are quite closely connected with each other, with one difference, that is the asset which is sold is different. Their house, here anything other than house. Because of that similarity, you will find quite a few common points here. For example, 54F ka exemption, 54 ka exemption was available to individual HUF. Company firm can buy but not eligible for exemption. Second, the asset which is transferred other than, but here we are not referring to nature of asset. It has to be long term. Again, is it same? That means, do you realize the investment will be made in residential house? Assessee is same. Nature of asset transferred is same. Only difference till now is sold asset is not residential house, anything else. Third point, how will we get our exemption? You will have to acquire residential house. Same, maximum one exemption. Maximum one you can acquire was never the condition. Exemption maximum one. That also in India. Same, if the two houses are adjacent to each other, next to each other, can be converted into one, then they will be considered as one house. That means, can you take exemption of both? Provided the houses are next to each other, they will be considered as one. Everything is same. Second difference now. This point is over. Now you tell me what is the second difference. Limit. Once in a lifetime where you get benefit of two houses, that is not allowed here. This section is very clear. You don't have any house. And this is your first and only dream house. So second house ka there is no discussion. But in any case, that second house was a lollipop of 2019 budget. There was no real intention of giving any benefit. So this part of it remains same without any change. Are we clear on this? Everyone? So what are the two differences between 54 and 54F right now? Asset sold and the two houses once in a lifetime ka benefit not allowed. Otherwise everything is same. D is Time limit. Now, which is the new asset that we are buying or investing in? House, which can be in two ways: purchase or construct. Purchase within 1 year before, 2 years after. Construct within, again same, bro, again same. Yes or no? Purchase within 1 year before, 2 years after. Construct within 3 years after. Everyone agrees? 100%. That means, is that also same as 54? Everything is same as 54. Two differences: the asset which we have sold, and second, once in a lifetime. But had this been for such small differences, I would have actually done 54 and 54F together. I would have said transfer of residential house in 54, anything else in 54F, because asset is same, asset transferred is same. Come on. Acquire residential house maximum one in India, adjacent same. Then I would have said for 54, once in a lifetime, two houses. When, and time limit is also same. When there are so many similarities, we can merge the sections. But the reason why we did not merge them is this, ladies and gentlemen. The quantum of exemption in all other sections is same: investment or capital gain, whichever is lower. 54F is different from the rest of the chapter in this regard. 54F ka calculation is completely different. In 54F, they have not said investment or capital gain, whichever is lower. 54F says if entire net sale consideration is invested, entire capital gain will be exempt, otherwise proportionate capital gain will be exempt. If entire net sale consideration is invested, entire capital gain will be exempt, otherwise proportionate capital gain will be exempt. क्या? Proportionate will be exempt. If entire capital gain, if entire net sale consideration is invested, then entire capital gain will be exempt, otherwise proportionate. Starts in broad A. Chill kar. I show you your reaction. I'll show you your expression. नंबर बढ़ गया लगता है नहीं chill no bro, as the legend says, रुको जरा. Gross sale consideration 50 lakh 50,000 minus transfer expense 50,000. Very smart. Net sale consideration 50 lakh minus, as you are aware, till 22 July I kawa, then kawa 15 lakh. What is your capital gain? What is your capital gain? If I ask you the same question again and again, you will have to answer. What is the capital gain? What is the gain amount? What is the gain amount? 35 lakh. If we apply the formula of capital gain, sale minus cost, what amount we are getting? Arey 35. What did I tell you? If I am asking the same question, you have to give me the answer. No, you are not understanding the question. What is the capital gain? What is the gain computed? What is the capital gain as per the computation formula? How much money do I have? Rubbish! Money I have is 50 lakh. Not 50 lakh and 50,000. Because while I got it, but I spent it. So net cash balance is this. Everyone be with me please. This was invested many years ago. So today I am not spending it. So today my buyer paid me 50 lakh 50. I spent 50,000. What is cash in hand? Capital gain is 35. But cash in hand is? Now Mitro, if you want to make this zero, in all other sections you have to invest this amount. Invest 35, subtract 35. But in this section, if you want to make 35 0, you will have to invest 50 lakh. If 50 lakh is invested, then 35 will be exempt. Invest the, look at the statement. Invest the entire net sale consideration. If 50 lakh is invested, then 35 will be exempt. Chalo, let us understand further examples. I will give you investment. You will tell me how much is exempt and accordingly how much is taxable. Okay. Supposingly I have invested 50 lakh. Answer what I am asking. Is entire net sale consideration invested? Yes. Will entire capital gain be exempt? Yes. So how much will be taxable? Correct. But supposingly I buy new asset of 25. Now please pay attention. In all other sections I will minus 25. Here I want minus 25. Your planning will be like this. Is entire net sale consideration invested? Is entire net sale consideration invested? No. Will entire capital gain be exempt? No. Proportionate. What percentage of my NSC I have invested? 50%. So what proportion of my capital gain will be? 50% is invested, so proportionate will be exempt. 17.5. And how much will be taxable? Hey, pagal, don't subtract from 25. And there are some idiots in CA final, believe me, they do 25 minus 17.5 equal to taxable. Pagal. Proportionate exempt. If 50 lakh is invested, then 35 is exempt. If 25 is invested, then exemption is how much? Cross multiplication. Unitary method. Proportionate. Ratio and proportion. Supposingly we have invested 40 lakhs. 1 minute. Is entire net sale consideration invested? Will entire capital gain be exempt? No. Then proportionate. What proportion? 40 upon 50. 80%. 80% exemption means 28. And how much will be taxable? 7 lakh, not 12 lakh. 7 lakh, because subtract from the capital gain. Understood? In proportion of investment of net sale consideration. Or listen to this statement, see if it makes sense now to you. In all other sections, we have to invest the gain amount. In 54F, we have to invest the sale amount. In all other sections, the optimum investment is the gain amount. In 54F, the optimum investment is the sale amount, the sale consideration, the net sale consideration. You have to make 35 0, you have to invest 50. Everywhere else, you have to 35. You have to invest 35. Correct? Correct? You understood the maths here, the proportionate? Of course, some students learn on formula basis also. They say, therefore, the exemption is. They do it like this. Long-term capital gain into investment upon net sale consideration. Formula-based learning. Every formula is derived using some logic. Whether it is your a square plus b square plus 2ab also. A plus b the whole square. A square plus 2ab plus b square. There is formula. You know that or no? You know it or you don't? A square plus ab plus b square. So a square plus 2ab plus b square. Every formula has a background attached to it. Whether it was your what? N factorial, R factorial, permutation combination, whether it was what your probability of formulas, total number of favorable events upon total number of events. Sir, please don't remind us of this. We are somehow out of it. Please, sir, please. I am still not talking about sine theta and cos theta. No. After inter, we only talk about beta, no theta. Everyone is with me? The formula based learning. But that is simple. No, see, if I invest 100% of my NSC, 50 upon 50, the full 35 exempt. If I invest half, so half of 35 will be exempt. Simple. Proportionate exemption. Everyone is clear? So here we have to invest the sale consideration, unlike every other section where we have to invest the capital gain. This is the difference in 54F and everything else. This is the reason why 54F was done separately and not with 54. Everyone is understanding what is happening, bro? Okay, fantastic. This was still point E, huh? Still steps remaining. Next, contravention. It's छोड़ना. Lock-in. Same. When I say same, matlab don't say same as 54 EC. 54 EC ka all the points were different. Same as the general chapter of 3 years, or you can say same as 54 if you want to avoid confusion. What is G? Contravention of lock-in period. Same as 54. H, CGDAS. You understand it will return. Only in 54 EC it was not there because of 6 months. Here so it is again 2 years, 3 years. So yes, this will be same as 54, but with one small little catch, that if there is unutilized balance, will there be unutilized balance? In 54, the entire unutilized balance becomes taxable. In fact, in all sections it becomes taxable. Here, only proportionate amount will be taxable. Now, please understand the logic of this. Very simple. In all other sections, see, understand. If this is my capital gain, how do I make it zero? By investing 35. So in CGDAS, I will put 35 and take exemption of 35. Have I taken full tax benefit? And if I don't use that money, then I pay tax on full amount. In 54F, do you understand that when I must have put 50 lakh in CGDAS, I would have taken 35 lakh ka exemption. So money put in CGDAS, 50 lakh. Exemption taken only 70%, 35 lakh. Supposingly, there is unutilized balance. Supposingly, full 50 lakh is unutilized. So we can't take tax on full 50 lakh because exemption was not full 50 lakh. Exemption was a proportionate amount, no? Investment upon NSC. Then, in that case, the taxable balance also will be proportionate. Not the entire amount, but the proportionate balance. Are we taking exemption in a particular ratio? Then, the taxability will also come in the same ratio, same proportion. Make sense? Everyone? Fantastic. Other points to be noted because 54F ka bhi all points are over. First point is only for section 54F, a special point. 54F is based on this idea that you don't have any other house. You have everything but you don't have house. On that basis, we are allowing you to sell other assets and invest in house. So we want to make it clear that only if you don't have house. If you have house, sell house, buy house, take 54. This section is only for anybody who is not already having. This section is only for assessee who is not already having any house. Listen, hey, wait. Not having any house. Correct? But mind mein, you know what is happening here? The lawmakers are thinking something else in their mind and writing something else in the section. What are they thinking? That this is for those assessees who don't have any house. Means on the date of your sale of whichever asset, you know, your shares, debentures, gold, you should not be having any house. But they are writing what? Not already having more than one house. Means it is okay if you have. Huh? Sir, what were they thinking? On the date of sale, you should not be having any house. But they are allowing. Actually, they should have written not already having any. Sir, why? Why? Because you understood what they are thinking. Then why are they writing this? Nothing is bigger than logic. Nothing is bigger than logic. Last class I asked how many were from Uttar Pradesh? Fantastic. Which place in Uttar Pradesh is your native? Prayagraj. Look at the accent, Prayagraj. So you didn't go to wash your sins? No? Ganga account debit to sins account being sins washed. No? You must be having your own house there. Of course. Bro, when I say, of course, parents. I know you. I have been observing you so many days. Today is my 30th lecture. 30th है क्या 29th है? हाँ 29th lecture. And I have been observing you. Obviously, it is not yours. Parents' house. Parents' house है? Correct है? And in Mumbai, since before you were born, before you were born. So over the years, must have first accumulated some assets in Mumbai in the form of gold, shares, debentures, and finally sold everything to buy the first house of Mumbai. So when you sell everything and buy your house, 54F will be triggered. But if 54F says that you should not be having any other house, your village ka house will come in the way of your exemption. Yes or no? If we write not having any other house, so you already have a house in your native place. That house will disable your exemption. And therefore, while in the mind we are thinking no other house, on the paper we are writing one house allowed. Difference enough. Logic. Nothing is bigger than logic. Correct? Further. So one house allowed thinking what? Yeah, by the way, they were thinking, but they have actually not said one house in village. So you already have a house in Mumbai also, you are still eligible, provided you don't have any other house. Further, when we allowing one house? This will exclude the one house, or this will exclude that house that is acquired during last 1 year for the purpose of exemption. Array, what is the time limit to invest in the house in this section? Purchase 2 years, construct 3 years, but purchase can be done before sale also, no? In 1 year. So now what is happening? Please understand. Okay. This is my date of transfer. Am I allowed to purchase within 1 year? This house I am purchasing for the purpose of getting my exemption. Finally, on this date, I will sell my shares, debentures, etc. And I have purchased within the last 1 year. Then I am eligible. So, bro, what is happening on the date of transfer? I already have this house. And plus, I already have my village house. So, on the date of transfer, I actually have 2 houses. They are allowing one house thinking this. So, this is to allowed. But on the date of transfer, do I now have 2 houses? Then that is going to make me disqualified for exemption. But bro, don't worry. In that one house ka limit also, the house which was purchased for taking the exemption is not going to be counted. Obviously, no. If that house only you count, so how it will work? So that exemption wala house won't be counted, and one more house won't be counted thinking it is your village house, but it can be anywhere because they are not mentioning that. And therefore, see how the law works. They were thinking of allowing 0 house on the date of transfer. But by the end, it is possible that you have 2 houses. Because they allowed one thinking village and one thinking purchase during the last 1 year for exemption. Of course, if I purchase the house or construct the house in the later period, then in this period, I should be having only one house thinking it is your village house. Understood? What were they thinking? On the date of transfer, you should not be having any house. Then they wrote in the law what? One house. And that will also exclude the house which was purchased for the purpose of exemption during the last one. Twist pe twist, bro. Twist pe twist. Correct, eh? We will remove 3 lakh words from the Income Tax Act as promised by the Honorable Shri Finance Minister. We'll have to wait and watch. 54F, this issue clear. 54F ka this issue clear. Next. This point is applicable for section 54 and section 54F. It was observed that people are taking very, very high value tax benefit here. Here it is what? Investment or capital gain, whichever is lower. And here it is what? Investment upon net sale consideration. Very high amounts, high net worth individual. Supposingly, I don't know whether you are aware, in Mumbai there is a place called Carter Road, sea facing, in a very high-fi place called Bandra. All Bollywood celebrities stay there. So Carter Road pe there was a bungalow owned by legendary Bollywood actor Rajesh Khanna. that was sold for some 80-90 crore rupees to an industrialist. And with that money, probably they must have acquired something else. Sometimes it is possible that your capital gain is 80-90 crore and full amount you have invested. And now if we go by the formula investment or capital gain, whichever is lower, so that exemption can be very heavy. What have we done in 54 EC? Restricted that amount to 50 lakh. But that was from day one since I studied. Now they want to restrict the house investment also, not in terms of amount. Bro, you invest 1000 crore, but exemption will be restricted. They say the investment amount. Are we considering your investment amount for calculation of exemption? Will be considered as maximum 10 crore rupees. Investment amount will be maximum 10 crore. Actually, auntie could have kept it simple by simply saying exemption will be restricted to 10 crore. But she does not want to restrict your exemption to 10 crore. In your calculation, you will take investment of maximum 10 crore. 54F is still going, 54 sorry is still going to be easy. Because what is 54 ka calculation? Investment or capital gain, whichever is lower. Correct? Hai? Supposingly, my capital gain is coming to 95 crore. And I am buying new house of 90 crore. Or maybe 100 crore. So what is my exemption? In this case, 90 or 95, whichever is lower, is giving me answer of 90. And in this case, 100 or 95. So what am I getting? 95. Do you realize I am taking high value exemption? So auntie is saying what? This will be restricted to maximum of 10 crore. So in both cases, what are we going to compare with 95? 10 crore. And therefore, your exemption will not be more than 10 crore. You understand? You understand or no? So basically, auntie here could have said simply what she said in 54 EC, maximum 50 lakhs. Here she could have said maximum 10 crore. Because instead of doing so much complication, if she would have simply said, find this answer and restrict to 10 crore. What is she saying? Don't touch this. Only this will be restricted to 10 crore. Correct hai? Arey bro, she could have said restrict capital gain to 10 crore and your answer would have still been the same. Ultimately in both cases is my answer coming to 10 crore. Bolo yes or no? In 54 no, it could have been easy. But 54F does not work like that, no. In 54F, what is my calculation? Long-term capital gain into investment upon net sale consideration. This is my answer for my exemption. If she says that exemption will be restricted to 10 crore, then I will apply the full format, including my investment, whether 90 crore or 100 crore, and then get the answer and restrict this to maximum 10 crore. No, sir. What is auntie basically trying to say? That this amount here, in the numerator, we will take maximum 10 crore. Look what she is showing. Now look at the sentence here. That the investment amount in your exemption calculation. What is she saying? The investment amount in your exemption calculation shall be restricted to a total of 10 crore. Everyone is clear? 100% clear? This, ladies and gentlemen, was your point with respect to 54F and 54 ka calculation. Yesterday when I asked you to ask some question, you said maximum limit of exemption. It is there, but not in all sections. 54, 54F and 54 EC. But 54 and 54F, the restriction is not on exemption. The restriction is on the investment amount. But 54 EC, it is on exemption. One last point here, which is a section 54H, which is different from all other sections. One last point here. Section 54H, which says if in any section, it is a case of compulsory acquisition. Think about it. 54D section itself is compulsory acquisition. But 54, house against house. I sell and I buy is an option. Is it possible? My house went in compulsory acquisition. So with compensation, I am buying new house. 54 can be compulsory acquisition. 54B can't be compulsory acquisition because that is fully exempt, investment not required. D is compulsory acquisition. Is it possible that in 54 EC, my long-term immovable property went in compulsory acquisition and I'm buying bonds? If in any section it is compulsory acquisition, then the time limit will always be from your, not from your date of transfer, but from date of compensation. In 54D, we specifically mentioned because section only was compulsory acquisition, but for other sections, we are making a general. Everyone is clear, sorted, absolutely. That, ladies and gentlemen, is your exemption from capital gain. Capital gain that way hereby comes to a complete closure, complete end, with the only last part now remaining in the chapter, capital gain, that is capital gain on stock markets. Something that this generation, gets excited instantly about. Oh wow, stock market, equity shares, wow, wow, wow. Computation of that capital gain is also gross sale consideration, transfer expense, net sale consideration, KAUA. There can't be KAUI, of course, because this is investment in the equity markets. Capital gain. But over the years, lot of changes have taken place. Shall we go to the capital gain on stock market? Is everyone clear on this? Fantastic. So, what do you mean by capital gain on stock markets? How will this be calculated? Why is a special treatment given? This concept was first time introduced in income tax law on 1st October 2004. More than 20 years ago. Date is still relevant. This date ka knowledge will somewhere have an impact on your exam as well, even if it is a 20-year-old thing. You will have to learn this date. This is that date when this special thing called section 111A, etc. was introduced in the law. Before 2004, anybody doing equity trading, the profits was same as any other capital. Long term was like long term 112 and short term was normal rates of tax. In fact, have you observed till now, we have studied special rate only for long term. There is no special rate of tax for short term capital gain. Correct or no? But in 2004, it was election year, and every election year, no amendments come from the middle of the year. Still, old governments used to keep it still sensible that 6 months, October. These days, bro, whenever they want to present the budget, amendments applicable from that day. That is how all your exam amendments are applicable from 23rd of July, because that was budget day. 2004 was historic in the sense that independent India's best finance minister ever in the history of independent India, best finance minister ever, who coincidentally happens to also be the worst prime minister in the history of independent India. No marks for guessing actually. Dr. Manmohan Singh. Oh bro, what a career as an economist. What a career as RBI governor. What an excellent career as finance minister of the country. A classic case and example of why you should not be taking things that you are not good at. Because you end up ruining your reputation about also what you are good at. Every time people tell me, no sir, why don't you take indirect taxes also? Ultimately, it's one paper of 50 plus 50. I am not good at it. You know, in Chennai, a street vendor got GST notice for accepting 40 lakh payments through UPI. He accepted. He used to sell pani puri, street food. He used to accept payments using UPI. Through 40 lakh rupees he earned in the year, and he got GST notice. Now, his knowledge of GST and my knowledge of GST is absolutely same. Except that minor difference that I know that I have to pay 18% on my services. But I don't have to pay on sale of books. Books are exempt from applicability of GST. It's the maximum difference between his knowledge and my knowledge. I am unfit for that subject and I should not be. If I do it, what will happen? I will study little bit every day, come every day. I will make mistakes in class. At the beginning of my career, way back in 2010, I used to make mistakes probably in DT as well. Because with time I learned. Beginning may you will make mistake, but now I don't have the privilege or the luxury of going to a class and making mistake at this age, I will end up spoiling my reputation altogether. When you are not fit for something, don't do it. Do what you are good at, and you will never lose your reputation. Dr. Manmohan Singh took up the job. And because he became Prime Minister, so obviously finance had to be given to someone else. Finance was given, again Tamil Nadu, a gentleman called Mr. PC. Are Priyanka Chopra nahi. Mr. P. Chidambaram. Dr. Manmohan Singh told him that nobody is doing trading in stock market. You all are a very lucky generation. You want to do equity trading? Tuck. Open your app. Every morning, zero the purchase, order, sale, order. Things have become so easy. You have something called demat accounts. You buy shares, the shares are added in your demat, and you sell shares, they are subtracted from your demat. Bro, we used to have hard copies of share certificate. I have shares of Reliance, 100 shares. I will take cash from you and hand over the share certificate. The bearer is the owner, just like a currency note. No demat accounts, no digital trading, no online availability of rates also. Stock ka rates used to come on TV channels, bus. No internet connectivity only was not there. Or maybe you stand under Bombay Stock Exchange building and keep tracking the stocks. At this stage, at this age, at this generation, I open the app at this time, what is the price going on of any stock I can give you? So what people were doing? I have shares. I want to sell them. I approach you. Please buy. Please buy. 3-4 people I approach. One of them agrees. I take money in cash over the counter and hand over the share certificate. And supposingly my contacts, no one wants it. So the deal won't be done. What is a stock market? The buyer has to go and quote his price, that I am ready to buy at this price. And seller has to go and quote his price. Stock market does the matching. If there are too many buyers, so that your number comes first, you have to increase your price over the others. Too many sellers, then you have to reduce your price. Finally, when the buyer and seller price come at the same level, the stock market executes the transaction on its own. Every time you open any stock price now, you'll find a list of people who have given an offer for sale, a list of people who have given an offer for purchase. There is a difference in that price. The moment the sellers reduce and buyers increase at the same level, stock market will do the deal. Without buyer seller knowing each other, you just have to do your side of the transaction. But in private sale, in those days, if I don't know the other party, there won't be the deal. And plus, cash sale of shares simply means loss of revenue to the government. Do you understand this? Everyone? Dr. Manmohan Singh told Chidambaram sir, okay sir, do whatever you want. But please bring people to do trading in stock market. Please make sure that people come and do trading in stock market. Please. I give you full freedom. Bring people to the stock market. What will happen? Two things. One, volume of trade will increase. Because you can do the trade without the buyer and seller knowing each other. Bigger advantage. Notice this and hear this out, please. If the trade is done on the stock market, it can't be done in cash. And you can't misreport or underreport this transaction from the government for tax purposes. Of course, with time, with digitalization, government knows all your transactions. At what price, what date I have sold my share, bro, I forget. The moment I am filing my income tax return, no? In that, all the sale of data, name of the company, date of sale, quantity, amount, total price, everything there. Because these portals are under duty to give all the data to income tax department. So whether I give my data or I don't give my data, income tax department from the market is directly getting all my data. All my data, bro, you must be thinking that what financial transactions I am doing, even my parents don't come. Arey, UPI mein you do know 20 rupees pan bidi shop. Even my parents don't know. I have seen kids at pan shops scanning the QR code and then telling the person that, Bhaiya, do you have any other number or QR where your name comes? Because in this UPI QR code, your shop ka name is coming. Do you have any personal account in which I can transfer? I've seen kids doing that. Thankfully, no one accesses my bank statement. I don't give anyone access. Otherwise, it will reveal a lot. क्या है? क्या है? Example है. All characters in all the stories are fictitious. You really think every Saturday evening I am doing something? क्या है? एक कान के नीचे. This Saturday evening, bro. Where do you stay? Here only, no? This Saturday evening, there is a college in Parel, MD College. You know, opposite Animal Hospital. हाँ, उसका ही नहीं. You study in MD College only. हाँ, मतलब you don't go, no, but this Saturday evening come there. In your college, see what I do. Obviously, no one does all that in college, what you are thinking. So, I am taking seminar in your college on the budget. क्या every Saturday evening क्या दूसरा कुछ work I don't have? अरे bro, once in a year or once in 2-3 years is fine. All characters, in case it was not clear from day one, if you have created any image, bro, you know what my sir does every Saturday evening, bro. I will also become a CA and I will also do every Saturday. That's not true. By the way, these are examples only to keep the atmosphere of the class light-hearted. And I realized this mistake recently when I was in the gym and my trainer was training me. And he said that between your class and the next class in your building only there is a gap of half an hour. So I am confused whether I should go home. I reach home and immediately I will have to come back. I said, no problem, come home. He said that if you make me drink tea, I will come. I said, most welcome. And during daytime, we drink tea only. I said in a very, very light manner, like I say normally in classroom examples only. Okay, daytime to tea only, no. Other things, COVID vaccine, evening time, sir. Then my wife made me understand, you don't do anything. Still you speak. You don't realize that you are having fun with sir. That is one thing. There are other people in the gym who are our building residents. Some of them know you and respect you. And you don't know most of them because we have 450 families. But all of them know me for various reasons. Most of them have kids studying commerce. So you don't realize what you are speaking and people have ears open. Without doing it, people will make a form image about you. If they are sending their kids to learn from you, they will stop sending, thinking that you have these habits. Be careful in front of whom. I did not tell her that I give examples in class. I didn't have the guts to tell her at that time. I said, okay, I will be careful next time. I didn't observe or notice. Masti, I am you. I am someone who wants to have fun all the time. So, sir said, make me drink tea. I said, okay, daytime tea only. Not realizing what can be the impact of this statement. Too immature at my age also. So I want to make it clear. Time pass. Hello. This Saturday evening, sir is not going anywhere. He is going in your college. Now see if you don't come. And it's a paid seminar. Paid seminar. Organized by WIRC का ही institute. मतलब institute का ही WIRC only is organizing. ना भी नहीं आया ना. Does your college auditorium have good infra? Just asking, because that's my daily ka route for coming to class. I come from that lane only, but I never entered. They have a projector, they have all of this. So get it done before my seminar, please. Hoga matlab your college. Now you see, if you are not there on Saturday evening, no, see what I do to you on Monday morning. Kya? That is not my problem. That is not my problem. That is not my problem. Full form is Maharshi Dayanand. No? I will have no daya on you. You just see. Coming back to the point. Point was, people are doing private trading. Government is not getting revenue, and therefore Dr. Manmohan Singh forced Chidambaram sir, come what may, people should be coming and doing trading on stock market. Do something. I give you full free. And thus on 1st October 2004, Chidambaram sir added 2 sections in income tax law. The date of addition of these sections is relevant even in today's calculation. Therefore, you have to learn this date. Stock market ka special sections entered income tax act on which date? 1st October 2004. Over the last 20 years, multiple times these sections have undergone amendments. First time introduced in 2004, 2009, 14, 16, 17, 18, 24, the applicable budget of your exam. Multiple times there have been amendments. Out of this, 2016 का budget का amendment and 14 का budget का amendment is not a part of inter-syllabus. Means I don't have to show off in front of you by telling you that I know chronologically which amendment came in which year. See, 2004 it came. First time I studied the existing law. But once you start studying tax, now you always keep a track of what is happening. So after I studied, first change came in 9. Then by 14, I was already teaching. So I have been keeping a track of all these amendments for the past 2 decades. I am aware of that. I don't have to show off. And at this stage of your syllabus completion, I don't have to prove to you that I know the full income tax law by heart. You do not have to learn which amendment came in which year, even if I tell you that. You have to learn what is today's law, including the amendments that came on 23rd July. Because we are aware that capital gains, maximum amendments have come in your exam. So let us understand what was the original law. Original law, Chidambaram sir said that if you are selling the following assets, if you are doing sale of the following assets, 1, equity shares. You all know what are equity shares? 2, equity oriented mutual fund. We have discussed the meaning of equity oriented mutual fund. And then Chidambaram sir stopped. Now, did I tell you that over the years many amendments have come? In 2014 budget, Jaitley ji added something called units of business trust. But you ignore this because business trust is a part of CA final. So you only think about 2 assets. When I ask you how many assets are covered here, your answer will be 2. Actually, it is not 2, it is 3. If today you go and read the section 111A or 112A, you will find 3 assets. But third one is not in your syllabus. So you learn only 2 assets. Equity shares, units of equity on mutual fund. Equity shares, units of equity on mutual fund. You have common sense that obviously they have to be, whether I mention or I don't mention, they will be by default listed only. We are not talking about unlisted securities here. We are talking about trading on stock market. So they have to be listed. So actually it is listed equity shares and listed units. But whether we mention or we don't mention, if we are talking about stock market, it is taken for granted that they are going to be listed. Equity shares, units of equity oriented mutual fund. Equity shares, units of equity oriented mutual fund are the assets that you have been selling privately. Now please come and sell on stock market. If you now come and trade in them on the stock exchange, because till now what you were doing, private sale over the counter, we request you to kindly do the sale on, please do the sale on stock exchange, please do the sale on stock exchange, stock exchange, stock exchange. Then in that case, we will levy on you an extra tax called securities transaction tax, STT, about which we discussed in PGBP, that if trading is my daily activity, I will get deduction. But if I am doing it as an investment, then in capital gain, I won't get this deduction. I will take from you an extra tax called STT, that also on purchase as well as sale. That also on purchase as well as. Okay. I have a big doubt, sir. Sir, you started explaining the provision by saying government is requesting please. What? Please what? Please come and do the trading on stock market. Please. And if I come on stock market, what are you saying? I will levy? Huh? Wait, please. Have patience. This STT is going to be a ridiculously low rate of 0.0125%, 0.06, matlab 1% of 1%. If the value of your trade is 100 rupees, so 1% is 1 rupee, and the STT will be 1% of that 1 rupee. You will have to pay 1 rupee STT on a deal of 10,000 rupees. Very, very low. Point percentage is much below 1% also. You understand or no? by paying this small minimum amount of tax, because government is not interested in the tax per transaction. Government knows that if we introduce some favorable tax sections here, volume will increase, and with the high volume, stock market ka volume, if it is in few crore rupees, it will become few hundred crore rupees, and we will be able to collect massive revenue by levying STT, even if it is a very small percentage, because volume will be very high. And so that you are encouraged, look at how we are going to give you a beneficial provision in tax. They say if STT paid on the sale transaction, if STT is paid on the sale transaction, by the way, STT is applicable on sale or purchase. Both. No. But to get the tax benefit that government is bringing here, government is bringing some tax benefit on long-term capital gain as well as short-term capital gain. Everyone, please pay attention. Government is bringing some tax benefit on long-term capital gain as well as the short-term capital gain. Everyone is with me? Only if you pay on sale. Means the tax benefit will be given to you even if the STT was not paid on purchases. I will eliminate the confusion with the logic. With the logic. STT is applicable on sale or purchase. Sale or purchase. Both. Today, if I buy on stock market, I have to pay STT. I sell on stock market, I have to pay STT. Both. But are we giving you tax benefits on long term or short term? To get the benefit, you have to pay only on sale. It is okay if you did not pay on purchase. Applicable on both. But tax benefit, for tax benefit, we will check only STT on sale. We will not check STT on logic hai. This logic will come with the date ka knowledge. These beneficial provisions introduced in income tax law from 1st October 2004. That means STT came in our country from 1st October 2004. Is it possible that somebody has purchased shares in 95, 96, 97, 98, 99, 2001, 2, 3, 2004 before October? Yes! Without STT. Because in India there was no STT at that time. Correct? Huh? Now I am selling after this date. Purchased before 1st October 2004. Sold today. When I will sell, I will do what government is requesting. Sell on stock exchange. Will I pay STT on sale? Yes. But I had not paid STT on. Because at that time in India there was. Then I won't be getting the benefit. Then all those people who already had shares, even after introduction of this, will do offline trading over the counter. So we are making it clear. Suno. All of you already have shares. New one, if you buy, then you have to pay on purchase also. Existing shares you have not paid on purchase, but still sell on stock exchange. Still sell on, pay only the STT on sale and be eligible for tax benefit. No problem. Means from today we are leaving STT on sale or purchase. Both. But for tax benefit, we will see only on sale. Poor guys, because you've already purchased before STT. Logic, no? So final conclusion. STT will come on both. But for tax benefit, we will see only sale. Now, will your capital gain be long term or short term? Both. Now, look at the only two assets you have to focus on. Equity shares. Before amendment and after amendment. 12 months is applicable because listed securities. Greater than 12 months will become long term. And units of equity on mutual fund. Here, they are also listed only, no? They also before or after amendment are falling in 12 months only. Because units of equity on mutual fund and after amendment, all listed securities. So effectively, this is going to be greater than 12 months for both the cases. And you have to learn only two cases. But then, we are to giving you benefit for short term also. For short term, Chidambaram sir introduced a section 111. Till now in this chapter, short term capital gain has been taxed at normal rate. Special rate of tax was given in section 112 only for long term. Short term capital gain will be taxable at, Mitro, Chidambaram sir brought 10% in 2004. Pranav Mukherjee sir made it 15% in 2009. First amendment after 2004 was 2009. Next came in 14, business trust, not in your syllabus. Next came in 16, IFSC, not in your syllabus. And 17, 18, because amendment is applicable, that I will teach you. 17, 18 and 24 are the only three amendments that you have to learn. 14 and 16 you don't have to. 17, 18 I will teach you. But let me first introduce you to the 2024 budget ka amendment. If sale now takes place on or after 23rd July 24. Today, if you are selling on stock market and you have short-term capital gain, can you believe this, ladies and gentlemen? They introduced the chapter of stock market in capital gain, considering it as a beneficial provision for you because 10% was really beneficial. 10 made 15 already increased, and they are like hashtag thug life. This was, last few months. If you are doing some small or big kind of trading on stock market, you have people in your family who are doing, they must have told you that stock market ka tax has changed from 15% to 20%. So with effect from 23rd July, this is going to be 20%. So now in your exam, you have to be very, very careful. If the stock market sale has taken place from 1st April to 22 July, 15, and from 23rd July to 31st March, that is if short term or long term I am extending. So this is the amendment of 2024. 4 it was introduced. In 2009 this 10 became 15. 2014 business trust added, but we have to ignore. 16 IFSC I won't discuss also because not at all applicable. 17, 18 I am yet to discuss. 24 is still going. So ladies and gentlemen, chalo, I agree that 15 also now made 20. It is a very, very high rate of tax. Still think about the larger picture. After a certain level in slabs, we have to pay 30%. In fact, 20 is applicable after 5 lakh income also. Yes or no? If my income is 1 crore rupees, I am paying 30% tax. But this income will still be taxable at 20. So government is saying it is still favorable to your normal tax. But bro, it is favorable only to those who fall in 30%. And those who fall in 20% or 5%, rather it has become disadvantageous. It was once upon a time favorable. Over the years, they have made it useless. You know why? Because now this section has outlived its utility. Government introduced stock market because people were doing private trading. They were not getting data of your trading. Now it is not possible that they don't get data of your trading. Bro, you sneeze how many times in one day? No, that government is coming to you. Everything that you're doing, no, bro, you think that no one in your house knows, no government knows. Bro, with me it happened recently. Financial transaction I am talking about. I think I must have told you also. My income tax ka record was showing that you have paid foreign currency, US dollars. And I was wondering, whom have I paid? It gives all the records, date of sale and purchase of securities. It gives my bank interest ka details. It gives my purchase of properties. All the financial transactions that I have done during the year now are shown by income tax department in the records. Because these external departments and agencies have given the data. Foreign currency payment. I'm thinking, whom did I make payment? Whom did I make payment to? I asked, ma'am, did you use my credit card for any payment? She's like, no. Kidhar? Zoom.us. ये foreign currency payment. My bank debits INR. The payment is remitted in Forex. That was Forex current. I forgot also. But my bank gave data to income tax department. Income tax department showed me that you have paid foreign currency. They have access to all the data. So now you do stock market trading only for your choice. We introduce beneficial provisions for collecting data so that you come and trade here. Now we have all the data. Private trading is closed. You can't be doing stock market trading privately. There is no hard copy of share certificate, nothing like that. So all the trading will be done stock market only, demat only. We have access to data. Now tax rate is 20%. Do if you want to, Nito, get lost. So sale up to 22 July, 15, and after 23rd July, from 23rd July, 20%. Everyone clear? But still beneficial compared to 30%. Now let's talk about long-term capital gains. This can be long term also, no, greater than 12 months. Both assets that we have, equity shares and units of equity of mutual fund, 12 months. When Chidambaram sir brought the section 2004, he said long term capital gain under section 1038. Can you believe this? Stock market suddenly became so attractive in 2004. I was in college in Mumbai. We have college right after 10th standard. 11th, 12th is also college. We call it junior college. We have 5 years college. Correct or no? Rest of India, it is college only for 3 years after 12th. I was in college. I am out with my college friends in a restaurant. I know that the kids on the next table are school kids, 8th standard, 9th standard kids. You can, with conversation, with age, appearance, you can find out that these are school kids. They are asking each other in Gujarati, Gujjus, all of them, Reliance Lidu, Reliance, Reliance Vechide. They are actually telling each other which share to buy, which share to sell. Bro, don't you think when you are in the 9th standard, you should be discussing your maths homework? They were discussing equity markets. Because everyone suddenly started investing in equity, knowing that once I cross 12 months ka holding, I don't have to pay a single rupee of tax on my stock market profits. I don't have to pay a single rupee of tax. Crazy profits people make. Crores of rupees of profit in the equity market without payment of any tax to the government. Because government genuinely wanted you to come to the stock market. They were suffering the losses. For so many years, people enjoyed the benefit. Until one fine day, a gentleman called Mr. Arun Jaitley. He comes on the 1st of February 2018. Budget day, no. That's not election year, no. So 1st February 2018. Early morning, 11 o'clock, with a briefcase in his hand. Tadang, 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 tadang. And in the budget speech, we come to know, bro, teri to lag gayi. You are gone, bro. It is hereby proposed that the exemption of section 1038, that is long-term capital gain on stock market, will hereby be abolished, and now the capital gain that you earn will be taxable by introducing a new section 112A. See, non-stock market long-term capital gain 112, stock market 112A. So there are 3 special capital gains in income tax law. Short term, only stock market. One thing today, be clear. Anything other than stock market, anything other than stock market, anything other than stock market, short term will be taxable at normal rate, normal rate, normal rate, normal rate. Special rate is only for short term stock market, long term outside stock market, and long term inside stock market. So long term always special. Please pay attention. Long term always special, whether stock market or other, stock market or other. Short term is special only under stock market. If there is short term capital gain on land, gold, jewelry, debentures, which is not covered here, preference shares, which is not covered here, bonds, normal slab rates. 111A, 112, 112A are 3 sections of special capital gains. Everyone is with me? The capital gain which was supposed to be exempt from 1st February, this is the second date that you will have to learn in the story. Yeah? On 1st February, देखो, you have to learn 1st October 2004 because you should know which date activated STT in our country. And you have to learn this second date. This is very important. This is that date from which exempt long-term capital gain of stock market became taxable long-term capital gain of stock market. Hello? When it was exempt, obviously there is no question of rate of tax. But now that it is taxable, so what did Jaitley ji say? He said 10% tax will apply on LTCG exceeding rupees 1 lakh. So first calculate your gain. Listen, gain is 5 lakh. Pay 10% of 4. Gain is 10 lakh. Pay 10% of 9 lakh. Earlier it was full 5 lakh or 10 lakh exempt. Now we are making it taxable. but still it is beneficial compared to your normal rate because first 1 lakh is 0%. First 1 lakh is 0%. You all have studied legal IDT. You all know the difference between exempt goods and zero rated goods. Zero rated is taxable but at 0%. Is first 1 lakh taxable? Yes. Yes. Rate is 0 and 10 on balance. If 5 lakh capital gain, then 1 lakh 0%, 4 lakh 10%. If 10 lakh capital gain, 1 lakh 0%, 9 lakh 10%. Still a beneficial rate. Exemption is removed, becoming taxable, but still 10% is very, very low. That also after 1 lakh. So can I say from this date, 2018, 1038 ka to existence is over 6-7 years ago. And last 6-7 years, students are learning this part. But then, auntie now says, tiding, 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 with effect from 23rd July, short-term ka rate is becoming from 15 to 20. And long-term to everyone knows, bro. Now then, do you understand? In the list of no indexation, we wrote 112. You know why? Because when there was indexation, still this was 10%, which is very less. Those who took indexation were paying 20%. Hello, those who took indexation were paying 20. But what is your tax rate? 10. So no indexation at 10. And of course, from this date, so all long-term capital gain ka rate is only becoming sale minus cost into 12.5. Indexation gone and LTCG will become 12.5. And in the period when there was indexation, you were still better than others. Therefore, no indexation and 10% now becomes no indexation and 12.5%. And one more relaxation, but this is slightly different. This they have not said from 23rd July. Matlab this will apply from 1st April. You observe, full chapter capital gain, all amendments activated from 23rd July. But here they have written with effect from AY 25-26. Means this amendment is applicable from first day. Are we increasing your rate of tax? Think about it. The people who are earning long-term capital gain, earlier it was sale minus cost. And now also it is sale minus cost. So believe me, the gain amount is the remaining same, no, before or after amendment. This used to be 10, now it is becoming. Are we increasing your gross tax despite saying that we are simplifying things? So there will be protests. So as a consolation, they said, we will apply 12.5%, not after 1 lakh, after 1 lakh 25. Matlab earlier, please pay attention, if my capital gain was 5 lakh, my tax was 4 lakh into 10. Now it will be 375 into 12.5. Understood? Earlier, if my capital gain was 10, my tax was 9 lakh into 10%. But now it will be 8 lakh 75 into 12.5%. Understood, everyone? So are we giving you special rate for long term as well as short term? Are we giving you special rate? So what is your task now going to be? You will have to divide your net taxable total income into 3 parts. Short term capital gain, that will come under 111A. Is there a special rate? Whenever there is special rate, you have to separate that from tax calculation. Then this will be long term, and then there will be other income. Correct or no? This will be taxable at normal rates. On this gain amount, we will be applying 15% or 20%. On this gain of 112A, we will be applying 10% or 12.5%. That also after 1.25 lakh. 10 and 12.5 both are applicable in your exam based on date. But 1 lakh is not applicable in your exam because that amount is changing on 1st April itself. That amount is changing on 1st April itself. Understood? And with respect to this, I want to give one more clarification that full capital gain will go in NTTI. That 1.25 lakh ka benefit you are getting, no? Are you getting that 1.25 lakh ka benefit? That benefit will come at the time of tax calculation. I have seen a lot of students make mistake here, go wrong here. I want to clarify this. Everyone pay attention. If my capital gain is 5 lakhs, I have to pay tax on 375. So in income computation, how much will I write? 5 lakh. The example or explanation of this is simple. Supposingly you don't have any capital gain. For a moment, come out of special rate. Think only about normal income, salary income. 10 lakh rupees. How do we tax it? First 2 lakh 50 0. Then from after 2.5 we start 5%. So if my total is 10 lakh, tax will come only on 7 lakh 50,000 because first 250 was 0. So in income, how much we will write? Full 10 lakh, no. That 10 lakh we will split and say first 2.50. But that does not mean that in NTTI we write 7 lakh. Do we write full amount in NTTI? Here also same thing. Is this 125 also taxable? Yes, 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 at a rate of 0%. So write full capital gain in your outer column. Let full capital gain come in your GTI, NTTI, and at the time of tax calculation, calculate tax only on the amount in excess of 1,25,000. Understood? How you will present in your NTTI calculation and tax calculation. NTTI will have full amount, tax calculation you will separate. Here, supposingly my capital gain is 10 lakh. So will 10 lakh fully come in this? Will 10 lakh fully come here? Yes. And then calculation I will say 875 into whatever is there. Is that clear? This is how we will apply special provisions on stock market. We are still left to discuss one, what amendment came in 2017. And the biggest amendment was 2018. The most dangerous amendment in the history of this chapter took place in 2018. What was that 2018 amendment? At least I told you the amendment. What was that amendment? Exempt capital gain became taxable long-term capital gain. That was the biggest amendment. At that time, one controversy came. And because of that controversy, Jaitley ji inserted one benefit in 2018. That benefit I have to discuss. Main amendment, we have understood. That exempt capital gain will now become taxable. But that benefit is yet to be discussed. Jaitley ji called that benefit grandfathering benefit. Ajoba. What benefit? Grandfathering benefit. We'll understand that also. But for now, let us summarize what you have studied in stock market so far. This provision is applicable only and only to two assets. Only two assets, only two assets, only two assets, only two assets, only two assets. By the way, in CA final, I teach students 3 assets because their business trust is also applicable. But you learn only two assets. And second condition, you have paid STT on sale. It is okay if STT is not paid on purchase. It is okay if STT is not paid on purchase. STT paid on sale. Two assets. Everyone has to be with me. Two assets, STT on sale. Is STT applicable also on purchase? But for tax benefit, sale. So, ladies and gentlemen, two assets, STT on sale. What is the crux of applying 111A, 112A? Two assets, STT on sale. Bro, 1, 2, 3, start. Kya? Two assets, STT on sale. Two assets. What are those two assets? Equity shares and units of equity on mutual fund. And STT on sale. Sir, what if I have not paid on purchase by chance? Of course. If you purchased before 2004, you may not have purchased. You may not have paid STT on purchase. But we will make you eligible for tax benefit as long as you have paid STT on sale transaction. Is that clear? If I do this, then finally, what is going to happen? My short-term capital gain will be taxable at 15 or 20%, and my long-term capital gain will be fully included in my NTTI, fully come in total. On first 1,25,000, I won't levy any tax, and beyond that, I will levy 10% or 12.5%. Correct hai? Everyone is with me? Now, there are other points to be noted, in which I will cover the amendment of 2017 and the amendment of 2018 in detail. Till now, what have we covered? I'll tell you. 2004, the chapter was introduced. 2009, short-term ka rate changed from 10 to 15. 14 में business trust got added, ignore. 16 में IFSC got added, ignore. 17 का amendment I have not discussed at all, which will be my first point here. And 18 का amendment I have discussed. Amendment is what? Exempt LTCG becomes taxable LTCG. But detailing is yet to be done. Correct? So first 2017. My question to you is, STT is applicable on sale or purchase? Both. But for getting the tax benefit of 111A and 112A on sale, and it is okay if STT is not paid on purchase. It is okay if STT is not paid on. Correct, hai? 2017, Jetli ji only said STT should also be paid on purchases. So in 2004, I don't want confusion. Applicability of STT from the first day was on both transactions. But for tax benefit purpose, that statement said STT on sale, sale, sale. And do we still remember the logic of this? What was the logic of giving tax benefit only on sale STT, not checking purchase STT for those who have already purchased? Short. That logic also you remember? But we live in a country called India. The moment people see a loophole in the law, they want to exploit the loophole. So there was some scam happening in taxation in stock market to manipulate the exemption that was being taken. Of course, removal of exemption happened in 18. So one thing you understand, when this amendment came, it was fully exempt. And people were misusing some provision in the law to take a tax benefit. People were misusing some provision in the law. Sir, let us understand what that misuse was. Let us understand what that misuse was. I am going and purchasing shares of a fake company, dummy company, existing only on paper. We, in legal language call them shell companies, incorporated without any trading. By paying 1 lakh in check, that means by making check payment of 1 lakh, have I become shareholder? But in reality, I am not shareholder. I will be given the cash back. That company is a dummy company incorporated by a chartered accountant. People from ROC were involved. People from SEBI were involved. And people from stock market were involved. And the connector, the link between all of them was a chartered accountant to coordinate between all of them. So you, please pay attention. This is the tax manipulation that I am making you understand so that you understand the logic. Otherwise, the law is now we will check STT on purchase also. But if you will understand the logic, no, then you will understand all the conditions. You have paid check of 1 lakh and we are returning cash of 1 lakh, which means you have not paid anything. But on paper, we will show the check payment and call you shareholder. Correct? Eh? After 1 year, we will merge this dummy company into an actual listed company with fake paperwork. We will show a merger, company taken over. And we will say that you have been in purchase consideration allotted the listed company shares. Now, exchange is no capital gain, not a taxable transfer. Capital gain will arise only when you sell your new company shares. That new company ke share price is 100 times of the old company. You are actually being given shares worth 1 crore against your shares worth 1 lakh. Now 1 year is over. Sell that 1 crore ka shares which you got against your 1 lakh ka shares. If you sell them, you will get the check of 1 crore. But you will have to pay your cash of 1 crore. And first cash has to be paid. Pay 1 crore cash. We have already shown you as a shareholder of 1 crore shares. We will sell those shares for you, credit the amount in your bank account. Means on paper, the cash was not shown anywhere. On paper, we were showing two transactions. Purchase at 1 lakh and sale at 1 crore, giving a capital gain of 99 lakh at tax of 0. giving capital gain of 99 lakh at tax of 0. Correct hai? People from stock markets were involved in that fake paperwork also. The whole transaction was executed at about 10% of the gain amount. And that also, if you bargain with the CNO, you can bring him to single digit like 8-9% also. But 10% was generally charged. Now think about it. On that 99 lakh ka capital gain that you are showing, what is the tax that you are paying? 0%. So net your cost is only 10% that you are paying to the CA. In that 10%, that CA, SEBI people, ROC people, stock market people, everyone will get some share. And everyone is happy. Because you saved your full tax. Do you understand? What is the manipulation? The sale took place of an actual listed company and STT was paid only on sale. The purchase was of an unlisted private company, a shell company which was only incorporated for no transaction. There was no STT on purchase. There was only STT on sale. Will you still get your benefit? Yes, because the law said STT on sale. See, the law allowed STT only on sale because of those people who have purchased before STT date. But people were manipulating that loophole to buy a dummy company and sell an actual company. And on the profit, pay only 10% as cost to the CA, but pay no tax. Because long-term capital gain was exempt. Believe me, ladies and gentlemen, in the month of March, chartered accountants used to message their clients, March ending is nearing. Anyone wants to show long-term profit, kindly contact me. Anyone wants to earn nice, show long-term profit. You have lots of cash. You want to convert that cash at zero tax. Only pay 10% to the CA and convert your money. They used to broadcast messages. Government found out that people are doing this. In fact, in the last decade, anyone who has claimed this LTCG exemption till 2017, of course, 18 it was removed, or agriculture income as exempt by showing themselves as fake farmers, they are all under scrutiny. They are all under scrutiny. Because government knows people are manipulating. How to stop this manipulation altogether? Now read the statement. You can't do only now dummy purchase, actual sale, all that is completely eliminated. Completely eliminated. When the law was, if you pay on sale, you are eligible for tax benefit, then you can buy fake and sell actual. But if for tax benefit STT is applicable on sale as well as purchase, that manipulation is over altogether. You understood? So from 2004, the rule was tax benefit if STT is paid on sale. But from 2017, tax benefit is tax benefit if STT is paid on sale as well as purchase. You understood the story here? But notice the following conditions. This is applicable only for equity shares. You know why? Because in equity shares, we can float fake companies and merge into real companies. Mutual funds can't be fakely floated. What are the two assets that are covered here? Equity shares and equity oriented mutual fund units. This provision is applicable only for equity shares because the cheating was happening only in equity shares. Everyone understood the cheating, and therefore why only equity shares? Why this condition of STT not paid on purchase is applicable to mutual funds? But where your brain stops, ICAI will start its Tandav. ICAI will give you a question where there is a company A Limited and there is a company B mutual fund. You have sold shares of A and units of B. STT, of course, is paid on sale. If there is no STT on sale, you get out of the stock market chapter. On sale, to day one it is required. But there is no STT on purchase. But there is no STT on purchase. So, A Limited, 112A benefit, not available. Because now STT has to be paid also on purchase. B mutual fund 112 benefit available because the rule came only for equity shares, not for units. Units STT has to be paid only on sale. Only on equity shares it is on sale and purchase both. Cheating was happening only in equity shares. Only in long-term capital gains. Short term is not in 112. Short term is in 111A. Think about it. Those days, not today's tax rate. Those days, what was tax rate of short-term capital gain in 2017? 15%. Plus you pay CA 10%. So that will make your total cost of 25. What's the point? Rather pay 30%. Do cheating and pay, save only 5%. See, long term was 0. Cost was 10%. So savings was 30 minus 10 equal to 20. It was worth the risk. Short term, everyone with me. Short term, tax 15. CA charges 10. Actual tax 30. Savings of 5 for cheating. Do cheating with the risk of getting caught. For 5% it was not worth. No one was doing cheating by showing fake STCG. Everyone was doing cheating by showing fake LTCG. That means for STCG, for 111A, for 111A, for 111A, STT has to be paid on sale, not paid on purchase. Purchase has to suffer STT from 2017 only if your capital gain is long term. Now institute will do what? They will ask you A limited and C limited are both equity shares. Equity shares, yes. STT paid on sale. Sale is mandatory. STT not paid on purchase. A limited ka share is long term. So will you lose benefit? Yes. B limited share is short term. It falls in 111A. You've not paid STT on purchase. Will you get benefit or lose benefit? Because STT on purchase rule came only for long term. Correct hai? Next. You know, since this came, there will be a genuinely affected class of people. Those people for whom we actually from day one said STT on sale. Who were those people? For which people we said STT only on sale for tax benefits? Those who have already purchased. It is for them we brought the rule. No. Now after this STT on purchase and sale, will they suffer? Think about it. If I have purchased my shares, equity share, not units. Shares only are covered here. Shares in the year 2000 and today I am selling them on stock market genuinely and long term shares, I am paying STT on sale, but I did not pay on purchase. So that way it appears like I violated the condition, but that's not fair on me, no. So only if the purchase took place on or after 1st October 2004. So those genuine cases will also be taken care of. Make sense to you? Now make sense? Those who have purchased before STT date still fall in STT on sale. So we were originally taught STT on sale. Now we are taught STT on sale and purchase. But purchase STT is applicable only on shares, only if they are long term, only if purchase took place on or after 1st October 2004. And last, here also there will be some notified exceptions. Example, bonus. Example, bonus issue. Example, rights issue. In fact, we have discussed all of them also in capital gain chapter itself. When existing shareholders get bonus, so they don't go to stock market to buy. They tell the company, please allot. When existing shareholders get right shares, they have 2 months to decide. I go to the company and say, okay, give me the shares. I am exercising my right. I am not acquiring on stock market. It is existing shareholder directly dealing with the company. So this acquisition cannot take place on stock market. That means this acquisition without stock market is without STT, without STT. Now am I the holder of these shares? I am selling it very genuinely on the stock market by paying STT on sale. But I have not paid STT on purchase. Are they equity shares? Long term? acquisition after STT date. So that way I will lose benefit because STT not paid on purchase. But their target was dummy purchase actual sale. These genuine cases will not be coming in STT on purchase cases. They have given some exceptions. Understood? So ladies and gentlemen, two assets STT on sale, two assets STT on sale, two assets STT on sale. The two assets are equity shares, units of equity oriented mutual fund. STT on sale, sale. Short term 111A 15 or 20. Story over. But if it is long term, that also equity shares, that also purchased after 1/10/2004, that also subject to certain exceptions. Then STT on sale as well as purchase, sale as well as purchase, both. If it is units or if it is purchased before 1/10/2004 or any genuine notified exception, then STT only on sale. But equity shares long term after 1/10/2004 with exceptions, STT on sale and purchase both will fall in once upon a time fully exempt. But now it will fall in 112A. First 125 zero tax but still included in income, and then balance at 10% or 12.5%. Correct hai everyone? So the STT on purchase ka rule from 2017 is clear. Okay, so 2004 introduction, 9 short term became 15%, 14-16 ignore, 17 ka amendment done, 24 ka amendment also done because 24 has changed both rates and the limit of 1 lakh to 1 lakh 25. Massive amendments in capital. One amendment which we have discussed already orally, slight writing, is in 2018 the exempt capital gain became taxable capital gain. That was the biggest change that has taken place in the history of stock market, because stock market ka attractiveness almost killed in 2000. People were making investment thinking that I don't have to pay any tax, but now they have suddenly started levying tax. So in 2018 some benefit was given by Jetli ji when he was taking away the exemption, and he called that benefit what? Grandfathering benefit. What is grandfather called in Malayalam? Apupan. We call him Ajoba. Ajoba nahi, Azoba. Practice at home. No, it is not that grandfather. Apupan illa. Apupan nahi. What exactly is this grandfathering benefit? What was the complicated calculation introduced? And basically the protest is about suddenly making my LTCG taxable. Do you realize 14 years people had exemption from 2004 to 2018, from introduction till 2018 ka budget, and suddenly you are removing it? So people protested. What was that protest and what is this grandfathering benefit? Last concept, and stock market will get over. And stock market gets over, matlab capital gain gets over. We just have to solve the balance questions. I'll do this grandfathering benefit after a break of 10 minutes, please. Okay, welcome back after the break. Let us continue. Very important part, the grandfathering benefit. Everyone is with me? You'll still remember two sections, 111A, 112A. What are the conditions? Two assets, STT on sale. Two assets, STT on sale. But equity shares on or after 1st October 2004, STT also on purchase. I told you to remember that date because if you remember that date, you will understand this condition. And likewise, I told you to remember one more date in the story. That is 1st Feb. 1st Feb 2018 ka budget was a very criminal budget for taxpayers, because what happened on 1st February 2018, the 1038 exemption converted into 112. Of course, first 1 lakh 0, balance 10, which further undergoes now amendment in the sense that first 125 0, balance will be 10 or 12.5 based on date. The point is 1038 becomes 112. So suddenly the exemption is gone. Now in this the problem is that supposingly in the year 2005, I purchased my share at a price of 5,000 rupees. That's my investment. The moment it crosses 12 months, it has become long term. My share ka price has become 6,000 after 1 year. What is the gain that has accrued? I am not earned it as yet. See, I will earn only if I sell. But if market price has become 6,000, so what is the accrued gain? And I know that on this 1,000 I don't have to pay tax because 1038. As time passed, 2007, 8, 9, 10, 11, 12, 13, that 5,000 ka share became 6, 7, 8, 9, 10, 11, 12, 13, 14. On 31st Jan 2018, an extremely important date in the entire discussion, the fair market value of this share has become 17,000 rupees. The share that I had purchased in 2005 for rupees 5,000 is now having market price of 17,000. What is the increase in the value? 12,000 is my accrued gain, not earned, because earned only if sold. But I am very happy, very happy. The gain is, almost triple of my investment. But I am very happy that right now I am not selling. And now probability of falling below 5,000 also becomes very low, considering the level it has reached. Whenever I sell and whatever be my profit, I don't have to pay tax. Do you realize this 12,000 is the gain that has accrued in the period during which this capital gain was exempt? Suddenly, on the very next day, 1st February 2018, the budget of 2018, budget non-election means 1st February. Jetli ji says, bro, 1038 gone. Now you have to pay tax under section 112A. All the dreams of getting tax exemption shattered. Bro, you were dreaming of tax exemption, no? By the way, I'll tell you one thing. This gain is never a gain unless and until you sell and earn it. If you would have sold till here, then capital gain would have been exempt. But now if you sell, I hope you understand, we have not traded at this price. So if I sell at whatever price, my capital gain will be that difference, which now will be taxable. My dreams gone, no? Shattered. Again, Deepika ji, again Om Shanti Om. क्षण से जो टूटे कोई सपना, जग सुना सुना लागे, कोई रहे ना जब अपना, exemption रहे ना जब अपना. You understand? We lost our exemption. Yes or no? Now, left with no choice. Whenever I will sell, supposingly whatever. Now, 24, 25 only because this is your example. I sell the share for a price of rupees 25,000. Correct? Eh? If I ask you to tell me what is the actual gain on the share, the actual capital gain is 20,000, which can be split in two parts. The capital gain that accrued during the exemption period and the capital gain that accrued after exemption was abolished, that is after it became taxable. Do you understand? What is the capital gain during exemption period? 12,000. And what is the capital gain after abolishing of exemption? 8,000. That is the total capital gain of 20. Of course, we have not traded at this price, but we are only splitting the 20 into two parts. Whatever increased in this period and whatever increased in this period. And this is where people protested. Sir, we have held the share for so many years, thinking that we will get exemption. Suddenly you are removing, that is not fair. So Jetli ji said, I will give you grandfathering benefit. Sir, what do you mean by apupan, azoba, grandfathering benefit? Sir, simply means that whatever was the capital gain during the exemption period, I will not take tax on this much capital. While your actual capital gain is 20,000, I will levy tax only on that capital gain which took place after the exemption was removed. And how much is that capital gain out of total? I will take tax only on this much capital gain. I am doing this suddenly, no? No problem. Grandfathering means the gain accrued in the market price of the share 1 day prior to abolishing of exemption will not be taxable even now. After today, if there is any increase in gain, that will be taxable. That means actual selling price cost price difference is 20,000, but taxable capital gain will be only 8,000. This gain we don't want to take tax, that is grandfather. And how did he include in the calculation? See, orally saying I will give you grandfathering is not enough. You have to show some calculation. And therefore, Jetli ji did this. He said take sale consideration actual. So actual means 25,000. And when you take Kawa, now bro understand. The rate of tax was already too less. Even before indexation was removed, it was still at that time also 10%. And therefore, from day one, this was never eligible for indexation. In the list of no indexation, go check stock market 112A we have written. What is cost? Tell me what is your pocket cost? 5,000. But what if I allow you to take actual cost of acquisition or fair market value on 31st Jan 2018, the second date which I told you to learn. I told you have to learn 2 dates. First October 2004 to know activation of STT, and second removal of exemption. So exemption was removed on 1st February. We will see 1 day before that how much gain was accrued, because that gain was exemption period gain, and after this is the taxable period gain. If I allow you to take whichever is higher, so can I say 5,000 or 17,000, whichever is higher, actual cost or ये पागल लोग, हाँ बराबर, actual cost of 5,000 or fair market value on 31st Jan 2018, whichever is higher में, what is my answer? Giving me taxable capital gain of the capital gain after exemption period got over. The capital gain after exemption period got over 8,000. Understood grandfathering? Simply put, this is grandfathering. Actual cost or FMV, whichever is higher. The moment we substitute your cost instead of your actual cost, we take actual cost or FMV, whichever is higher, we have included a grandfathering in the calculation. What is meaning and logic of grandfathering? Meaning is gain till it was exempt will still remain exempt. Logic is simple. Suddenly you are removing, that is unfair. And what is calculation? In cost we are taking whichever is higher. Are we incorporating grandfathering now in the calculation? I have one good news, one bad news. I am giving good news first. Everyone has understood the meaning and logic of grandfathering, that the gain till exemption period will remain exempt. Bad news is this is not the actual calculation written in section 112. This I did it in green color. If it was the actual law, I would have done like my black color every time. This small little example I took so that you understand the meaning and logic. Now that you know the meaning and logic, I will go and do actually how you will be calculating the capital gain under section 112A when you are solving an exam question. Because you now know the meaning and logic, things will become very easy for you. First thing we take is sale consideration. Very easy. This has to be actual. You can repeat your example also. In your example, this was 25,000. Of course, with STT. Sale always has to be with STT. From this, we will subtract cost of acquisition. Now, going by the meaning, the logic, the simple example which I gave you, the answer was actual or FMV, whichever is higher, actual or FMV, whichever is higher. And there is a slight twist here. We were taking fair market value on 31st Jan 18 and comparing this with our actual cost to choose whichever is higher. We won't do that directly. The first step will be, we will do this FMV or our actual sale consideration. Bro, this amount, whichever is lower. We will first choose between them whichever is lower. And then that lower amount will be compared with your actual cost of acquisition, and we will choose between them whichever is higher. That finally will become the cost of acquisition, which you will be subtracting, will give you the capital gain on stock market, about which we also know that full will go in NTTI, and that 1.25 lakh benefit will come not in income calculation but at the time of tax calculation. One thing everyone understands, sale consideration has to be taken. Second, about this capital gain, this last line that I have written, that also everyone understands. Obviously, from the sale we will subtract cost. That is not something that requires explanation. Come and focus everyone on the cost of acquisition part. Do you observe? This is the cost of acquisition part. In this cost of acquisition part, if I would have written only this much, everyone has understood that. Everyone has understood actual cost or FME, whichever is higher, grandfathering, so that this period gain remains exempt and only this period gain becomes taxable. There is only one thing that we have not understood, is that, sir, what the hell is sale consideration doing in the definition of cost? Huh? Hey Bhagwan. Sale consideration minus cost of acquisition equal to capital gain. You are taking sale consideration inside cost of acquisition. Hello? Supposingly I remove this. Check the entire format. You don't cancel, huh? Check the entire format. Have you understood everything written? This is the same thing, no bro? Same meaning, same logic, same explanation. There is only one thing that I have to explain to you. What is selling price doing in cost of acquisition? You understand? If that is explained, story is over. And this is the real calculation. Huh? This was only for explaining the logic. Real calculation is this. Of course, beyond the logic, the only extra part in the real calculation is selling price. Let us understand with the help of a few examples. This will make us clear what exactly is our selling price doing in the definition of cost. I will first tell you the purchase date. I will tell you the purchase price. Of course, this is my cost of acquisition. Hello. Over the years, the value will increase. So I will get my FMV on 31st Jan 2018. You all have understood this logic that I have to choose between them, whichever is higher. But suddenly, out of nowhere, the concept comes and tells you that you also take your sale date, and on the sale date, what is your sale consideration or sale price. Instead of directly choosing between them whichever is higher, your first step is to do what? Between them, choose whichever is lower. Hello? And whatever answer you get, between them, choose whichever is higher. Sir, we are not understanding this part. Correct? Once I explain this part, everything will be clear. Finally, we will discuss what is the capital gain or capital loss. Everyone is with me? Chalo. Let us take our first example. Supposingly, I purchase my share on 10th April 2023 at a price of rupees 10,000. The fair market value of this share on 31st Jan 18 was 8,000. I sell my share on 5th April 24 at a price of 25,000. First of all, you understand this is not going to trigger capital gain. This transaction will trigger capital gain. And for we to keep things applicable to us, I have to pick up a date which is in 24-25. I cannot take any date here which does not fall in your exam year. It can't become an example for you. CA Inter May 25, September 25 for those who have purchased these video lectures, January 26 for those who have purchased these video lectures. Examples will remain same. May 26 new example. Last batch Jan 25 different examples. Their date was 23 because their financial year was 23-24. I hope you are understanding what is happening. Everyone? So can I say capital gain has arisen? What will be sale consideration for the purpose of capital gain? Come on, sale consideration will be 25,000. Now when we subtract cost of acquisition, so we will have to give grandfathering benefit. Yes or no? Fantastic. Anybody who has purchased before 2018 will be eligible for grandfathering benefit. Correct or no? You have purchased in 23, how can there be grandfathering benefit? Correct? Obviously no, because grandfathering ka idea was till 31st Jan 18. That means can I say FMV is irrelevant? Array, FMV is relevant only in grandfathering. Bus, what is our long-term capital gains? Just subtract 15,000. Just subtract 10,000 ka cost and your LTCG will be nonsense. Nonsense. Wake up! This forget about grandfathering. When you were so bright to identify, sir, this was purchased after 2018. No grandfathering. Pagal log, you should have identified holding period is less than 12 months. Short term. What do you think? If I ask you when asset becomes long term and you do the 36, 12, 24, after 23rd July 12, 24, vomit everything in the answer paper. Question paper will give you purchase date and sale date and with type of asset. For example, equity shares, you have to think of 12 months. Had it been property, you have to think of 24 months. They will give you name of asset, purchase date, sale date. You have to look at them and decide long term or short term. This forget about grandfathering. This is not even example of long term capital gain. This first example was done to awaken the sleeping generation. Jago, jago, wake up. This was a scam. This was a game I played with you to see how many are lost in their wild dreams. Partially lost because identified, sir, no grandfathering. Purchased after 31st Jan without identifying it is short-term capital. This was an incorrect example, purposely done. Now let's do a correct example. No cheating. 10th April 2005. First of all, now if I sell this share on 5th April 2024, two things. One, it is long term. No cheating. Two, grandfathering will come because before 2018. Okay? So purchased at 5,000. FMV was 17,000. Sold for, purposely I am taking the same numbers as my EC example. One thing we understand that here there will be capital gain. That also long term with grandfathering. So what will be my sale consideration? Sale consideration is never a problem. Problem is under cost of acquisition. In the simple example, you all understood out of the two, whichever is higher. See, do you realize 12,000 gain during exemption period? 8,000 gain during taxable period. So only this much gain should be taxable. Simple may I taught you that out of these two, whichever is higher. But what is the complicated definition of cost? First they say, between these two choose whichever is lower. So what's your answer? And then between these two choose whichever is higher. Final answer is still. So when I take cost of acquisition of 17,000 here, I get my, now this time, long-term capital gain of, which means the gain during exemption period remains exempt and the gain during taxable period remains taxable. And I know to which your reaction is, sir, this we understood in the simple example. Bro, it is that simple example. And supposingly this step was not done and I would have told you 5 or 17, whichever is higher, still your answer would have been same. Because sir, we have understood that simple part. Yes, this is example of long term and grandfathering, but this is still not an example of why this. This is still not an example of, sir, why this. My third example will clear your doubt. Third example. Everyone with me? Third example. No cheating 10th April 2005. No cheating 5th April 24. So two questions. Long term and eligible for grandfather. Original cost 5,000. Hello. Market price became 17,000. Till now we were assuming that after exemption got removed, it got sold at 25. Actually, don't you think it's a wrong assumption? After the exemption got abolished, markets have to fall. because now people know stock market is not attractive. Here the selling price increasing. I'm not saying impossible, but still more probability is that I will sell at a price lower than this price. The market price will rather fall. Don't you think that is more realistic? So actually in my case, market price has fallen. Whether fallen or increase, ultimately when I do this, I have to do the calculation of capital gain. Chalo, let's calculate capital gain. Sale consideration. Now let's talk about minus cow. Listen, what is grandfather? If Jetli ji would have kept it so simple, out of these two, whichever is higher, then you would have subtracted 17 and shown loss of 1000. Basically, you are fooling the government. Because, listen carefully, this is that complication which you require explanation of. Show me your hand. Put in your pocket and tell me what you paid to become shareholder and how much you received back. 16. 17 you did not trade. 5 and 16 came. Is it a case of profit or loss? Profit of 11,000. Profit of 11,000, 11,000, 11,000, 11,000 profit. But here you will subtract 17 and show it a loss of 1. You know why? Because your actual profit is less than exemption profit. Still it's a profit, no? What was your exemption period profit? 12,000. And what is your actual profit? 11,000, because FMB has fallen. So what Jetli ji is trying to say is that if your actual profit is higher, then I will take tax only on that excess. If your actual profit is lower, don't pay tax. Make it 0. Because this much gain, we never want tax. So if your profit is less than 12,000, I won't take tax. For example, 11,000, na? I won't take tax does not mean you can make it loss. Just by misusing the FMB in the calculation. You can use FMB to reduce your gain so that you pay tax only on this much gain. But you can't use FMB to create a loss. If we directly take cost or FMB, whichever is higher, this will become a loss. We won't do that. What will we do? We will first take whichever is lower, 16, and then between these two, giving you final answer of and taxable amount of nil. And yes, no sir, my question is simple. What is exemption period gain? 12,000. Is actual gain 0 to 12,000? Actual gain is how much? Actual gain is how much? 11,000. Is it 0 to 12? What is exemption period gain? 12,000. And what is actual gain? So is actual gain within the range of 12? Don't pay tax. If actual gain is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, don't pay tax. If actual gain is more, for example 20, then pay tax on excess, 8. If actual gain is less, don't pay tax. Make it 0, but don't make it a loss. Selling price will take care of it. Selling price will take care of it. If I don't have to explain so much complication now, I can keep it very simple for you. Just go and find out your actual gain. This is the wrong example. Second example. Just go and find out the actual gain. Tell me, second example, actual gain. 20,000. In this, how much is exemption period gain? 12,000. Pay tax on it. Third example, actual gain 11,000. Less than exemption period gain, don't pay tax. Make it 0. Selling price in the calculation will make it 0. But don't make loss. Understood? FMV cannot be misused to create a loss. FMV cannot be misused to create a loss. Last question of students. Sir. That means in grandfathering, there can never be loss in the calculation, no? The question is, can there be loss in the calculation? Yes. If my actual selling price falls below the original cost. Here my selling price has fallen only below FMV. But compared to original cost, it is still a gain. So we are making it 0. But if my actual selling price falls below the original cost, then there can be a loss also. Let's see, last case, last permutation. 5,000, 17,000. Market collapsed and I sold my share at 4,000. This time, pocket also it is loss. Check of 1,000. The benefit also we will give you of 1,000. Sale consideration 4,000 minus. What will we do? First, lower, and then whichever is higher. So 5,000, creating your loss of 1,000. Correct or no? So effectively, what do you have to do in grandfathering? You go and find out that actual means what? Actual sale consideration minus actual cost of acquisition. Is that coming to a profit or a loss? Is that coming to a profit or a loss? If it is coming to loss is which case? My example number 4. Then you consider that as long-term capital loss and take set off, carry forward, adjust against other profits. But if it is coming as a profit, so divide that profit into 2 parts. Is the profit up to exemption period profit? For example, 11,000 was within the range of 12,000. Example 3. Hello. So we will make the amount nil. It's a profit, but we won't take tax. And if the profit is more than exemption period profit, which is our example 2. 20 was more than 12. So we will pay tax on excess. And example 1 was not an example of grandfathering. You understood? Grandfathering, simple. Exemption period profit not taxable. If actual profit is higher, pay tax on excess. If actual profit is lower, make it 0. And if it is actual loss, make it loss. Correct hai? Grandfathering concept, everyone clear? Brave. Last concept. How to find out fair market value on 31st Jan 18 for the purpose of grandfathering calculation. Do we need this? Is it relevant? A very, very important amount. See, this amount and this amount, I always have records. How to find out this? Because it has direct impact on my calculation. What amount will be considered as FMV for the purpose of grandfather? You understand? Everyone? You will have to go and see whether this security was listed at that time or unlisted at that time. Please understand. Today it has to be listed. But is it possible that time it was unlisted? For example, I had purchased unlisted units before 31st Jan 18. They got listed in 21 and I am selling in 24. When I am selling, STT paid on sale, not paid on purchase. No problem on units, not paid on purchase. So fine. How will I get FMV? See, anything that is listed at that time, getting FMV is easy. How? Stock market will give me the answer, no? But anything that is unlisted on this date, please understand. I had an unlisted unit. 31st Jan 18 came. It is still unlisted. Later listing took place and finally transfer took place. Here there is capital gain. I am eligible for grandfather. So what do I have to do? First, out of these two, whichever is lower, and then out of these two, whichever is higher. But for that, I will need this FMV. If it was listed at that time, still easy, I can get the value from market. But if it is unlisted, is it possible that it was unlisted that time but listed now? Possible. Supposingly, I have purchased a private company shares. In that, I got bonus allotment. Possible. Bonus without STT. The shares are still unlisted. Here the company went in listing. It went public. IPO came. When I am selling, it is sold on stock market. STT paid on sale, not paid on purchase, but given in the exceptions. So grandfathering is applicable. Grandfathering will require me to find out the FMV on 31st Jan 18. You understand? How will I do calculation of FMV? Listed or unlisted at that time, because today it has to be listed. Let's see. This is still easy. Don't you think so? On 31st Jan 18, if this security was listed, so we can get the fair market value directly from. But there is a twist in this also. On any given day, with respect to any share or security, on the stock market, there is a highest trading price. There is a lowest trading price. There is an average trading price. There is an opening price. There is a closing price. On any given day, which price we will take? We want to be taxpayer friendly. So highest trading price. See, one thing you understand, this FMV is going to become cost of acquisition. So we are taking highest value means we are giving more deduction. If we would have taken lowest or average or anything, no, people would have protested. When we are taking a measure which is favorable to you, you have got no chance of protesting. Think about it. If I do anything which is anti-you, you will protest. I'll say from tomorrow onwards, we are running short of time, so we won't be taking any break in any lecture. That's an anti-measure. You will give me those reactions. But if I say that, no, when we are doing complicated chapters, 10-15 minutes not enough, we should take half an hour break in 4-hour lecture. So you won't protest, don't you think? Anything that is favorable to you, you won't protest. Once what happened, there was the one courier I had to send in Kerala. The team sends. Order comes, there is office team which forwards the email to the dispatch team, and dispatch team delivers the books directly from the warehouse. I don't get involved in this. Because if I start getting involved, then I won't be able to do anything else. My involvement is maximum on one weekend or at least one weekend out of two, at least twice a month, maximum 3 or 4 times in a month. I read all the WhatsApp chats of all the students on the office number. At least once in a month I do that. Sometimes if I am free on Sundays, so all Sundays I do it. I got to know what is the communication, what are the students demanding, what do they want, is there any difficulty anybody is facing, is the staff not replying properly, I have to train the staff if the reply is not proper. And I insist the staff to reduce the call to this extent possible, because anything that is done on call or WhatsApp call, we won't have records. Who is right, who is wrong, you can never say. So anything that is there in the chat, we always tell students also, whatever you want, discuss with us on chat so that we have all the records. A student order from Kerala hi tha ya Andhra, not 100% sure. We promised 10 days mein books will be delivered to your house. Whichever rural part of the country you stay, 10 days mein books reach on. Actually, it takes only 3-4 days. But we commit 10 days. Kya hota hai? That you supposedly place order at 10 o'clock in the night. Office team will come and check next day morning. Next day afternoon, they will forward email to dispatch team. Afternoon or evening, if dispatch team has already sent the current day ka all the couriers, the same day the staff can't go again and again. So third day pe, the staff will take your record, make the parcel. Third day ko the dispatch happens. In that also still, in 2 days it reaches, but sometimes postal delay or holiday anything. 10 days, definitely the books will reach. Once what happened, a courier company took our book ka parcel, and that was that some rural village where no other courier company was ready. Only that one company said that we will deliver. Took the parcel. We paid also. And all the employees went on strike. 20 days, the courier company employees were on strike. Delivery is only not happening. See, student is not wrong in saying, sir, you promised 10 days. Starting mein, team made him understand that there is this problem. And another courier also, we don't mind sending. Problem is that only company which delivers is not sending. Then the student escalated it to ma'am, because the system is that if the staff by chance is not giving you proper reply, then the person who will come into the picture will be ma'am. I will still be the last person to get involved. Ma'am asked me what to do. I said, send another, but that we can't do. What to do? I said, refund the fees. She's like, what if the courier company opens in the next few days? I said, it will open, so it will not bring the courier back. It will let it go. 2 books, let go, free of cost. What to do? The moment I refunded the fees, the student cannot protest. And I told my team to message that we are refunding the fees immediately. What else can we do? See, it was not our fault also, and it has never happened in so many years. But we never thought that courier company will take courier and go on strike. We had to refund the fees. We refunded the fees. And next day, the courier company strike got over. 2 days, the books got delivered. I told my team to message that we are refunding the fees. Still, sir has said, keep the books. Don't send them back. If someone had ego, would have sent it back. But that student did not send the books back. But fair enough, somebody is using it for education. Obviously, won't be selling it. Education ke liye, no problem. So this is where somehow we have to sometimes charge a premium on our book more than the cost. Not to make profit. Because many a times there are certain expenses sudden out of nowhere. The courier ka cost also went and the books also went free. But we refunded the full money. Now see, the moment I refund, you realize if you are that student, you can no longer fight with my team. Now what will you fight about? What will you protest? Sir, till now, sir, you have taken my money, you are not giving my books, you promised this, you are not honoring your... Take your money, story so. I normally don't own it. Every time you will be finding some way, sir. Sir, handwriting is not good, refund the money. No clear, no refund policy. But in a situation which was in nobody's control, to shut your mouth, I had no other option. Because for a book sale of 2000 rupees, I can't be taking abuses from a student. I can't tolerate that. And why will my team tolerate? Bro, they are, I don't even like to call employees. Bro, they are working and getting paid. They are not getting paid for listening to abuses of people. And which was genuinely not a fault of theirs. Supposingly, if there was some fault, no, still with the staff that works for you every day, no, sometimes you have to tolerate. What to do every day, you're doing good work. You have to adjust. Now, we are the people, ma'am and myself, who have to listen from students also and who have to listen from staff also. So, therefore, I don't get involved. Because I know that if I get involved, I'll give refund. I have got so many better things to do. And this is, I know of human nature. The moment you do something favorable for someone, protest will stop altogether. I am not saying taking highest price on the stock market is illogical. I am only saying that assessee ka favor hai. Assessee cannot now say, sir, why? If we take average, you will say why. If we take lowest, you will say. If you take closing, someone said closing for them, from there. Someone said closing. You will protest. But the moment we take highest, means cost of acquisition is the highest possible figure. Means gain is the lowest possible figure. Now what will you protest about? What will you protest about? You understand or no? So highest trading price. But then sometimes, I don't know whether your generation may not follow stock market, primarily also because you all are students, and in that generation, how to follow stock market? We need to have also something. No? Student life, it does happen. Unless you are also working and earning and investing, that's a different thing. Sometimes, some companies' securities are not traded at all on a particular date. One reason, stock market has suspended trading on that day. Another reason, there is something called upper circuit, lower circuit. Now, what is this concept? Supposing there is some good news about a particular company. The moment the good news comes out, everyone wants to buy. No one wants to sell. There is no seller in the market. See, what does market do? Seller price, buyer price, they match. But nobody is coming only to sell. The buyer is coming, 100 rupees. Now, next buyer wants, he is also greedy. He also wants the share at any cost. So, he will offer 110, 150, 200. But there is no seller. So, the buyer ka bidding is continuously increasing. But if there is no seller, only bidding will increase. Transaction won't take place. The price can go beyond control. And therefore, stock market puts a limit that on a particular day, the price cannot increase beyond this much percentage of the previous closing price. Some stocks they keep 5% circuit, 10% circuit, some stocks go in 20% circuit. That the price won't go beyond this, even if the buyer is willing to offer. That is upper circuit. Likewise, if there is bad news, like it happened with Adani some time back, so no one wants to buy, everyone wants to sell, and every seller is reducing the price, reducing. Between last price and today's price, the fall cannot be more than that same 5, 10, 20% as decided. But there is no buyer. So only the price is falling. Ultimately, transaction is not happening. We say that the share is at a lower circuit. If 4-5 days there is lower circuit, then the price of the stock has drastically collapsed. If the news is a temporary news and it is going to go away very soon, buy it. That's the best time to buy. When everyone is selling, that's the best time to buy. When everyone is buying, sell it. Sell it. This much timing ka game also, if you understand, you can make a fortune in the stock market. So one thing we all understand, that sometimes there may not be trading on particular securities on particular dates because of upper circuit, lower circuit, because one party is there but other party is not there only. Is it possible that this share which is now being sold was not traded on that day? So then in that case, if there was no trading on 31st Jan 18, in that case, we will take still the highest trading price on the last day when trading took place. Go check. 30th Jan. 31st Jan, no trading, no? 30th Jan. That was also circuit. No trading. 29th Jan. Market closed because of Sunday. 28th Jan. Market closed because of Saturday. 27th Jan. Market closed for any random reason. Stock market is the best place to work. For slightest of reason, they shut down. Raksha Bandhan, stock market closed. Bro, my school never gave holiday on Raksha Bandhan. Any reason, stock market closed. So 27th also market closed. 26th market closed. Republic Day. 25th was the date when trading took place. Take highest price. Last date when trading took place on that day high. So effectively we have to take highest price. If trading took place on 31st Jan, then on that date. Otherwise, whenever last trading was. Correct? But at the same time, is it possible that on that date the stock was unlisted, later became listed? So this you divide into whether it was share or unit. Because are we aware that two assets are covered in this chapter? If it is unit, so you will have to go and take fair market value from a specialized person called merchant banker. Merchant bankers are those who are in the profession of valuation of securities. They can do valuation. Just like, valuer does valuation of properties, merchant banker will do valuation of securities for you. So approach a merchant banker, he will do it for you. And as far as share is concerned, for example, I told you about those bonus shares. So what you will have to do is pay attention, otherwise you'll get confused. Take actual cost. That actual cost must have been incurred, in 10, 11, 12, 13, 14, 15, any of those years. And index this cost till 1718. Sir, why 1718 and no other year? The date in discussion is in 1718. So do one thing, take your cost of 1011, unlisted. So bring that value till this date using indexation. That will become your fair market value for the purpose of grandfathering. Understood, everyone? Ladies and gentlemen, boys and girls, Devyo, Sajjano, Mitro, congratulations, badhai ho, abhinandan. That is your chapter called capital gains. That is 80% of your direct tax syllabus. Just to let you know, we are done with 4 heads of income. Some questions are still remaining. But I must tell you one thing. House property ka chapter we completed. After that, we have done only 3 chapters. And when did we do house property? Hey Bhagwan, last birth? Huh? January? हाँ January. Just imagine yourself compared to that day when I told you foreigner will come to India and earn income. Indian will go in the foreign country and earn income. वही याद है? All right, ladies and gentlemen, the questions on capital gains chapter. We have completed till question number 92. Question number 93, please. Question number 93, page number 126. Please read the question.
Rajendra purchased a house in 1213 for 80 lakhs in Mumbai. The said house was sold by him to Bharat for 1 crore 20 lakhs. The details are here under agreement entered on 10th August 24. Sale deed executed on 1st Feb 25. The stamp department valuation on 10th August 24 was 1 crore 60 lakhs, whereas on 1st Feb 25 it was 1 crore 75 lakhs. Further, on the date of entering into the agreement, 10 lakhs was received by account to check by Rajendra. Compute capital gains, assuming the matter was referred by assessing officer to valuation officer of income tax department, who has asserted FNB to be 1 crore 68 lakhs.
Which concept of capital gain is primarily getting tested in this question? 50C. Start में the house is purchased. Nothing till then. Then he sold. Is this actual consideration? But do we know in case of immovable property we can't take actual consideration? We have to take actual consideration or stamp duty value. Now the agreement was done on 10th August, but the registration was done on 1st February. On the registration date 175, but on the agreement date 160. One thing we all understand, that which stamp duty value is better for the assessee, 160 or 175? 160. But we will see whether he is eligible. On the date of agreement, there was 10 lakh received through account pay check. Advance received at the time of agreement? Allowed mode. If this was cash, so we won't get that option, but allowed mode. So we have the option, and VO was also called. So everything that we have studied in 50C is primarily getting tested in this question. Net sale consideration, if we have to observe, the actual consideration is 1 crore 20 lakh. But do we make actual consideration as our answer? No, we will compare it with stamp duty value. Now stamp duty value on the date of registration is 175 lakh, and on the date of agreement is 160 lakh. Of course, I see 160 better, but am I allowed? Yes, sir. Why? Because advance in allowed mode, and therefore, am I going to be allowed this? Yes, and therefore, I will bring 160 here. And now that 160 already is lower, then the VO's value is of no use. Please understand. If this was cash, so this is not allowed. That means now we have to compare these two. And if we compare between these two, then yes, the valuation officer can compute a value in between the two, that is 168. But because this is already an allowed mode, that means 175 is gone. Now our comparison is between these two, whichever is higher, or you can say 160 I have taken in the outer column, so 160 or 120, whichever is higher. When my comparison is already this, if the VO is doing anything lower than this or above this, VO's value is of no use. So my comparison finally is between 120 and 160, and therefore my net sale consideration का final answer will be 1 crore 60 lakh. Wrong answer. Now don't tell me no sir, I thought about it. No, don't lie. You thought about it? No, you have to always check. See, you're not understanding. This is 160, so correct. But if this was 125, 130, 131, 132, then this would have become the answer. Till 132, this would have become the answer. Because the difference is up to 10%. Understood? Minus. I think this is. Hey, sorry. You will have to do. Correct, hai? And therefore your you learn tax or no, my lungs will become strong. You're making me do breathing exercises. Chalo, fantastic. Ladies and gentlemen, question number 94.
A fire took place in the premises of Mr. X on 1st May 13. As a result of this, his whole ring was destroyed, which was purchased by him on 1st June 7 for 2 lakhs. The insurance company admitted an insurance claim of 10 lakhs, which was received on 1st September 24. Compute capital gains.
A fire took place, that cannot be capital gains. No? Insurance compensation received only will trigger capital. Only destruction is not capital gain. This is, believe me, this is the date of transfer. Correct? Hai? Who asset is not a capital asset, personal movable asset. Exception. So is this a capital asset and taxable transfer? Yes. Will there be capital gain? Yes. Question number 94. What is the net sale consideration? The compensation that you have received? 10 lakh. And minus what is your kawa? Why kawa? Long term allowed indexation, but after period. And what was the kawa? 2 lakh. And accordingly, your lot sub. That way, let's not take away things from auntie altogether. She has made capital gain easy to a certain extent that every question we would have to do divide and multiply. Your year if we leave aside, because your year both possibilities. Forever ke liye she has made it easy. Had it not been for that one paragraph, that if the capital gain computed as per, is the tax computed as per old provision is better, it is unnecessary making it very difficult. Question 94. 94 ho gaya, sorry, 95.
X acquired the house property on 1st April 2000 for 5 lakhs. FMV of the property on 1st April 2001 7 lakhs. He incurred 1 lakh in missing addition of another floor on 1st July 8. The Government of India compulsorily acquires the house property on 1st August 19. On 1st April 24, he receives compensation on 29 lakhs. Agreed by the order, he files a suit against central government for enhanced compensation. The court enhances the compensation to 35 lakhs by order dated 1st December 24, out of which he receives 4 lakhs on 20th Feb 25 and 2 lakhs on 10th April 25. For the delay in compensation, the assessee also received interest of 12 lakhs on 1st November 24. The expenses for such interest amounted to 1 lakh. Compute total income for assessment year 25-26.
The interest part, no, we will discuss in the chapter income from other sources, because the interest received is taxable under IFR. So instead of doing the total income is what? Capital gain plus the interest of IFRS. We will focus only on computation of capital gain. Which transaction are now the testing your knowledge of? Compulsory acquisition. Is compulsory acquisition a taxable transfer? Yes. The capital gain has arisen when? In 1920. So we should have paid tax in 1920. No, we will pay tax when we receive installment. So the total compensation that the government gave him was 29 lakh, which he received in 24-25. So he has to pay tax on 24-25. If he had accepted the amount, then the story would have been over here. But he did not accept the amount. Because he did not accept the amount, he went for additional compensation. With the government giving him 29 already, the court made it 35. So you understand he won't now pay tax on 35. He will now pay tax only on 6 lakh. Order came on 1st December 24, out of which 4 lakh he received within 2 months in the same financial year. But 2 lakh he received in the next financial year. But he has received the 6 lakh. So this is final order. Correct? Hai? Let us see how we will be paying tax on this capital. First, 1920. What happened in 1920? Is that a taxable transfer? So has capital gain arisen? So let's pay tax. No. This capital gain is going to be taxable on receipt basis, first installment, and therefore the year 1920 does not have any relevance. Correct or no? No. End of holding period, end of indexation. Correct or no? Fantastic. Now what? Next year 24-25. What happened? You got your first installment. When you got your first installment, in fact, in the first installment itself, they have paid full amount of 29. By the way, even if they would have made part payment, you would have to still take it. Net sale consideration 29 lakh minus Kahua or I Kahua. I Kahua. Reason 1. Long term. Not in exception. Property allowed. Before amendment. 1st April. No? 1 minute. My question is, supposingly the compensation that is given to you in this question, supposingly this compensation you would have not received on 1st April, but 1st December after amendment. Then what will be your answer? Then it will be CUL. Huh? I am asking you. 1st April, so you are saying I Kahua. If it was 1st December, then what will be your answer? You are not understanding my question. I am not asking for calculation. I am asking you, here what will I subtract? The two options are Kahua or I Kahua. You know what questions to ask, but you have to take decision also. So right now your questions are what? Long term, eligible, and before. So your answer is I Kahua. ठीक है? But supposingly I would have changed the date from 1st April to 1st December. So you have to do the same analysis and give me the answer. Kahua or I Kahua? You are understanding? Do the analysis, please. Long term, eligible, before amendment ke after amendment? हाँ, 1st December I am asking. Non. हाँ, so your answer is not after amendment. It is before amendment. Transfer has taken place before amendment. Because transfer has taken place. Bro, this date is irrelevant. You are only getting money now. Transfer has taken place in 1920. Across the calculation or discussion, this would have remained ICAI. What was my cost of acquisition? 5 lakh, but FMB on 1401 was 7 lakh. So what will I choose? 5 or 7, whichever is higher. 7 lakh. Divide by 100, no, because base year. Multiply by 363, 24, 25. 9. CII of 1920, bro. CII of 1920. You understand? It would have always been I Kahua. 280. That will be your ICOA year. Everyone is with me? Is the calculation over? No. He added one floor in 89. That will give you ICOI. What was the cost of that floor? 1 lakh. Will that also be eligible for indexation? If cost is indexed, then improvement will also be. Correct or no? multiply by, now you are clear that indexation will stop here, and divide by 100 like I कहुआ नहीं नहीं divide by cost inflation index of 89 because year of improvement. Understood or no? 130, that is your cost inflation index of 89. This will give you your I CAI and this will give you your long term capital gain, everyone. Now second, in this year itself, now this part is over. If he does not go to the court, then the whole question is over. But has he gone to court? And he has received court ka final order. And you observe that also happened in the same financial year, 24-25. Will he have to pay tax? The enhanced compensation ka amount is rupees. But out of that, in this year, he has received only 4 lakh. He has not received 2 lakh. So how much we will take? Because full enhanced compensation will be taken in the year of final order. Correct or no? Minus kawa nil. Sir, why nil? Because full cost is already deducted above. Kavi of course will be nil. They have not given any litigation expenses for this. They have given litigation expenses for interest. Interest ka litigation expense we will discuss in IFOS chapter. Everyone understood? The start date, end date of indexation, and that one confusion should now not come again. What that confusion was? Sir, even if we do that analysis of after, in cases of conversion of capital asset into stock in trade and compulsory acquisition, if it has happened earlier, the indexation has stopped there. And answer will always be before. Correct hai? Chalo, let's go ahead. Next question number 96.
Mr. X is a proprietor of an enterprise having 2 units in 6-7. He transferred on 1st April 24 his unit 1 by way of slump sale for a total consideration of 25 lakhs. The expenses incurred for this transfer were 28,000. His balance sheet as on 31st March 24 is as under. So we understand this time which question ka concept or which concept ka question is coming. Slump sale. He has 2 businesses, unit 1, unit 2. He is selling which unit under the slump sale? So while the organization may be having assets and liabilities in both units, we have to give all assets and liabilities of that unit. So in the net worth as well as the fair market value, we are interested in assets and liabilities only of that unit, unit 1. For example, in building, unit 1 is 12 lakh, unit 2 is 2 lakh. So while reading the question, you will only read building 12 lakh. Machinery 3 lakh. Why, sir? Because we are only interested in the unit which is getting sold. Debtors 1 lakh. Other assets 1 lakh 50,000. These assets will be given away in course of These assets will be given away in course of slump sale. Correct? Hai? On the liability side, won't be giving capital raise. Devaluation reserve for building of unit 1 3 lakh. Please observe. This means this building of unit 1 was never 12 lakh. It was only 9 lakh. However, we have created a revaluation reserve by upward revaluing our building. The journal entry would have been building account debit 3 lakh. So that made it from 9 lakh to 12 lakh to revaluation reserve account 3 lakh. But do we know that whenever we are doing slump sale in the calculation of net worth, we don't have to take revaluation. FMV may we will take the present values, but in cost we will take, that was where I said that our government has been, yes or no? So that means, can I say our value of building will only be 9 lakh rupees, and as far as bank loan and creditors are concerned, they have given you the quantum of unit 1. So we will be obviously taking only unit 1 assets and liabilities. Yes or no? How much is the amount that we are getting as sale consideration under slump sale? What is sale consideration? 25 lakh. Everyone focus please. For the purpose of cost of acquisition, we have to calculate net worth assets minus liability.
But do we know that for the purpose of sale consideration also we have to calculate assets minus liabilities, the net worth? Why, sir? Because my actual sale consideration of 25 lakh or the FMV of the business, whichever is higher, is my final answer. But I will not waste time. I'll make you understand the reason. Do you realize that the total of all the assets is 21 lakh? So in that, if I take only unit 1 assets, it will reduce, no? Plus, I will minus unit 1 liabilities also. Don't you think so? What is FMV calculation? Assets of unit 1, ka present market price. So you can take, at least for that, you can take 12 lakh. 3, 15, 16, 17.5, already lower than 20. Further, we will minus the liabilities, further lower. So ultimately, answer is going to be 25. Bro, if the asset side total only is coming to 21 lakh 50, which contains both units, that also before minusing liabilities, the one thing is clear, that the fair market value of business is lower than actual sale consideration. Therefore, we won't waste time. We'll write a note though, but we won't waste time. You have to be a little smart while appearing for your exam. If you go by the rule book, sir, actual sale consideration or FMV, whichever is higher. But clear it is visible that FMV cannot be higher. Then why waste time in computing? One note can be sufficient. I'll explain. But for now, we will read the other adjustment that we have.
Revaluation reserve is created by revising upward valuation of the building of Unit 1. Other assets of Unit 1 include patents acquired on 1st April 22 for 50,000, on which no depreciation has been charged. Rate of depreciation on patent is 25%.
So thank you for the entertainment. Other assets ka revaluation reserve we already have decided, we will ignore that. We will take only 9 lakh. And as far as other assets are concerned, other assets ka value given is 1 lakh 50, but they are actually only 1 lakh, because this amount also includes 50,000 worth patents. And we have taken original cost of patent. Now in slump sale, when there are depreciable assets, which value has to be taken? WDV. So what we will do is 150 we will divide in two parts. 1 lakh book value and 50,000 we will take the cost and we will depreciate if they have not depreciated. And even if they have given you the rate, no, they are doing a favor. Believe me, certain block ka rates you are expected to know. So intangible 25%. What else? Compute capital gain for the assessment year. Hello. So let's compute capital gain for the assessment year. Question number 96. We have to compute capital gain. Gross sale consideration. Please pay attention. What is my actual sale consideration? 25. If this I compare with the fair market value of the business, it has to be lower only, as total of assets is already lower than 25 lakhs. So when I choose out of them whichever is higher, my final answer will become 25. From this, what will I do? Minus my brokerage, my transfer expenses of 28,000, giving me net sale consideration of 24 lakh 72,000 minus one thing we all know. And by the way, exam may don't do this, write I and confirm. This is my explanation that there is no indexation. Actual questions, you don't do it like that. Cost of acquisition. Cost of acquisition is nothing but the net worth, which we will have to make a working note and solve. And once we do that, ladies and gentlemen, we will get the capital gain. Have they given us since when he is doing this business? 2006-7. If he is doing this since 2006-7, this will be LTCG. Do you have this doubt, sir? Indexation is not available. Why you are wasting time? LTCG or STCG, how does it matter? Do you have that doubt? But rate is still different, no? So yes, we have to do this. So this question will come to its conclusion the moment we make working note 1, net worth. What is relevance of net worth in slump sale calculation? This will only become Kawa. What is the definition in words of net worth? Asset minus liability. Let's take assets. While words may it is same as accounts, valuation will be as per tax. One by one. We have building, but we will ignore the revaluation. So we will take building value only of 9 lakh. Next, machinery. देखो, वैसे it is depreciable asset, so we should take the WDV. But when nothing is given, so we have no choice but to assume that the WDV is also same as the value in the books of accounts. Next we have is debtors 1 lakh. Next we have other assets, but when we will take these other assets, we will be excluding patents. So we will take only, and then finally we will also take our patents. We can't take full 50,000. We have to take the cost and depreciate it. Cost of 50,000 minus we will charge depreciation at 25%. But the patent was acquired on 1st July, not from April. So our depreciation is going to be only of 9 months. Yes or no? Ye pagal! Greater than 180. There is no concept of day-wise, date-wise, month-wise depreciation. Full or half, we will be charging full year depreciation. Greater than 180 days, full year depreciation of 12,500. Understood? And therefore the value of patents in the amount column will be 37,000. Nonsense! क्या एक क्या क्या नहीं, why this 37,500 is wrong? बोल. The moment I say 37,500 is wrong, he's like, huh, right? हाँ तो same है. Why? What is wrong in 37? Is this not coming to 37,500? So what is wrong in that amount? Okay, it is right. 37,500 is wrong or right? Right. Anybody has pokal bamboo? Why is 37,500 wrong? This is cost on 1st July 22. Huh? April it is acquired. How does it matter? More than 180 days. No? This is WDV on 31st March 23. Oh, pagal log, those who have not yet observed. Slum sale is on 31st March 24. So you have to charge depreciation at 25%. One more year. So again 12,500. 1 minute. Again 12,500. Yes or no? Again 12,500. Yes or no? Bolna. The what? Kya? After Diwali? What is he saying? WDV. You don't know that we follow WDV. तू मस्त है. Must. You are always like that. Okay, today is something special. I believe he is always like that, no? Yeah, whoever did this, you never know, huh? When it will come to you, no? Huh. Gupta, सगे में you are. I'm just asking. ये भी गुप्ता है. So what, you all have taken some family admission? Hey, bhagwan. Everything other than concept relevant for you. Minus liabilities. Everything other than concept. In this, Shruti is like, तुम लोग सब भाड़ में जाओ. I will finish the question, give you the answer. You do all the discussion that you. Bank loan. We obviously will take only the proportionate part applicable for unit 1. So 1,40,000 and creditors 1.5 lakh ka 25%, 37,500, giving you your total liabilities of 177,500 and giving you net worth of 12,50,625. This net worth is only going to become your cost of account. This question is not over, pagal. This is working note. Now come and complete this question. 12,50,625 to get your long-term capital gain of 12,21,370. When there is no indexation, no, there can't be change in answer year after year. Capital gain ka none of the answers I know by heart, because every year answers change due to indexation. But this, there has never been any indexation. So this net worth ka answer and this final answer is coming to this amount since last 18 years. Even when I studied the same question as a student, there has been no amendment in slum sale since, except in GSC we have to take whichever is higher. Don't tell this to auntie, please. By the way, you tell her or you don't tell her. She's in any case bringing the new law on. By the way, this question was also short. Okay, fantastic. Question number 97. Before you come to question number 97, come to the bottom of page 129. Remember, I did with you something called self-generated asset, where I gave you example of brand or goodwill. So brand, goodwill, trademark, etc. Yes. But there is something called loom hours, tenancy rights, right to carry on business profession. These things are also self-generated assets. Loom hour. For example, I have machinery in my organization. My staff works only for 8 hours shift. So my machine is getting used only in 8 hours. But the machine ka capacity is that it can be used for 16 hours in a day. So there are idle hours. You want to use those idle hours. I am selling, not my machine. I am selling those hours, those idle hours too. That is capital gain because I am selling a capital asset. It is not in the exceptions. Go check. Hello. Cost of acquisition of those hours. There is cost of machine. It is a part of WDV. But there is no cost of those extra hours. Zero. You understand this? Loom hours. Tenancy right. Tenancy right. I do an agreement with someone to stay in the flat and I am paying rent. That means, can I say I have tenancy right? Can I say I have tenancy right? I have done an agreement. I told the owner that I have got some work. I don't want to stay in the house. I am leaving. Owner is saying that you have given me money. I am not giving you money back. You keep it locked or you can give it to anyone else. I sell. I don't, please understand, I don't sublet you for this much period. If I sublet you, then it will be income from other sources. I sell my right and forever go. If I sublet, no, I can tell you to vacate. I tell you that I am going forever. Now this is your tenancy. I am selling my tenancy to you. Now I will never come and interfere. It is between you and the owner. You understand? So I have paid rent. That rent may be my personal or business expense. But for this tenancy right, I have not paid anything extra over and above the rent. Especially in that old housing system, I think we happen to discuss that old Pagdi system of housing, where there is one person who owns the land in the entire building. But he does not require such a big building for his family. So one by one, he is selling the houses. While he is selling the houses, the land and building still remain to him. So what you are actually purchasing is not the house. Because how can you purchase the house? It is not your land. It is not your building. You have only purchased the right to stay in that house. And one day when you want to leave, you are surrendering that right. Remember, in that old system of housing, which in Maharashtra is famous, we call it Pagdi system, where for those who want to understand, even now if you don't know, you own the land, you own the building, but you are allowing me to stay in that house for a particular compensation. And some building owners charge almost the value of the house. And if ever I want to sell it, 30%, sometimes these days so they ask for 50%. Some building owners are so cruel, they say, you will have to sell it to myself only, otherwise I will not let you sell. You have to sell it to them only. Because they are the owners of the land and building. You understand? So finally, what are you selling? You are not selling the house because you were never the owner of the house. You are selling your tenancy right. Are you understanding? All of them are going to be considered as self-generated asset. Of course, FMV option not allowed. And of course, goodwill of profession not taxable also I have discussed with you. Question number 97.
Find the taxable amount of capital gains on transfer of following capital assets. X surrendered his tenancy rights to landlord for 12 lakhs after 15 years of tenancy.
Haji. So what is going to be the capital gain? Selling price will be 12 lakh and cost price will be nil. That means 12 lakh only will become your long-term capital gain. And long-term, no, 15 years. Correct? And second.
Mr. X sells goodwill of his profession for 5 lakhs.
So 5 lakh minus 0, 5 lakh. No, goodwill of profession is not taxable. Correct hai, everyone? Chalo. Next question. Question number 98.
Mr. X acquires 1,000 unlisted shares in X Limited for 20 lakhs on 1st August 2002 as an investor. On 1st July 2007, he started a new business of dealing in shares and securities, and the said shares were converted to stock in trade, on which date its FMV was raised 80 lakhs. On 5th April 24, he sells the same for 95 lakhs.
We will have to compute his income. When? This is the year of acquisition. Here there cannot be any income. This date in 2007-8, what did he do? What exactly happened in 7-8? Conversion. So in 2007-8, if conversion has taken place, that means, does everyone agree that taxable transfer has taken place? Has capital gain arisen? Yes, so let's pay tax. No, it will be taxable in the year of sale of stock. So conversion year, any relevance? Yes. End of holding period and fantastic. So finally, when we will pay tax, when will we pay tax? In the year of sale of stock. When did we sell the stock? 5th April 2024. We sold the stock. That means, can I say 24-25? The year of sale of stock, income will come. Which income? Which head of income will come? PGBP. Correct? Capital gain exempted. So which head of income will come? PGBP and capital gains. Correct hai? In PGBP, we have to write selling price and cost price. What price I sold my? Cost price is still subject to discussion. In capital gain, what will be my net sale consideration? I have to still decide. But cost I know, because when I incurred the cost, it was acquired as capital asset. What was the cost of my shares? 20 lakh rupees. Kawa or I kawa? How? Long term, eligible, before 1st April, therefore before, and 1st December, then still before, because year of conversion is year of transfer. So I cover 20 lakh, divide by 2 3, so that's 105, and multiply by 24 25, 363. Now multiply by cost inflation index of 7-8, that is 129. This will give you your kawa, I kawa. So this will give me my capital gain, but I have trouble in life, sir, because I don't have selling price of capital gain and cost of PGBP. I will need both to complete. What to do? The fair market value at the time of conversion. What was that? 80 lakh. That will become selling price in capital gain, and that will become cost in PGBP. So of course, I know that my PGBP is 15 lakh, and whatever be my capital gain, that I will subtract my cost of acquisition, and I will get my long-term capital gain. Understood conversion of capital asset into stock in trade ka concept? So, question number 99.
Mr. Mohan acquires 1,000 shares in Mohan Limited for 5 lakhs on 1st April 24 as stock in trade. On 1st July 24, he converted it into capital assets, on which date its FMV is 6 lakhs. On 20th of Feb 25, he sold all the shares for 7 lakhs.
So, first this time he purchased as stock in trade and converted into capital asset. That means, can I say it is the reverse transaction? Stock converted into capital asset. So this time, do you realize this 5 lakh to 6 lakh ka 1 lakh ka gain, this time will be considered as PGBP. And from this 6 lakh to this 7 lakh, this 1 lakh will be considered as, of course, it has happened immediately. Purchased just sold in the same year. So this will be considered as short-term capital gain. Total gain is 2 lakh. but the period for which it was stock in trade, that 1 lakh will go in PGBP, and the period for which it was capital asset, that will go in capital gains. Correct hai? Chalo. Question number 100.
Mr. R, a real estate developer, entered into a joint development agreement with Mr. L, a landlord. As per the agreement, Mr. L transferred his land to Mr. R, and for which Mr. L will get 50 lakhs as refundable advance and 45% of the flats built in the project as his share in the project. In addition to this, he will also get 100 lakhs in the year of completion of the project. Completion certificate issued, stamp duty value of landowner's share as on the date of issue 200 lakhs of completion certificate from competent authority. Cost of acquisition of land 60 lakhs. Discuss the tax implications.
Which concept? Joint development agreement. Mr. L was the owner of the land. Real estate developer told him, give me your land. In return, what will I give you? I will give you 100 lakh rupees as compensation in cash. And I will give you 45% of the flats built because you are only the owner of. So 55% I will sell. That means, can I say this is like sale of your land? And in return, you are getting two things. Cash compensation and 45%. Listen, you are also getting 50 lakh rupees. But this 50 lakh rupees cannot be taken as your sale consideration. Why this 50 lakh can't be considered? Because this is refundable. This is like an advance because I am giving over my land. Of course, this 50 lakh is given, no? So practically how we will do it? One day when CC will be received, 50 is already given, we'll give 50 more to complete this 100. So effective total compensation will be 100 lakhs plus 45%. Correct? Cost of acquisition is already given to you 60 lakhs. Sale consideration will have two components. What are the two components in sale consideration? Compensation in cash. That means, can I say we will take 100 plus stamp duty value of the new property. Now, what is the stamp duty value given? 200. On that, we will take 45%. No, no, because this is the only mistake that you can make here. This is value of the landowner's share. Means whatever was the actual stamp duty value of the entire project, they have applied 45% and given you this amount. This total is your sale consideration. They can change this question and give you the stamp duty value of the total project, say 500. Total project 500. On that you apply 45%, then you will get his share of 225 plus 100. But here, if you observe the words carefully, this is the landowner's share. So that's the only mistake that you can make here. 100 plus 200 is your total sale consideration. 300 and Kavwa is already given. 240 will become your long-term capital gain. Everyone clear? Bro, 100 questions done. In capital gain, I will be doing with you questions till 110. So there will be about 8-10 questions after that. I won't say they are homework for tomorrow, but day after tomorrow they are homework. So if you do 10 today, you don't have to do. Chapter is over. You can do all of them today also. I will be doing with you question number 101 to 110 in tomorrow's lecture, which will take about 45 minutes or so. And we are starting our last head of income from other sources in tomorrow's lecture itself. So tomorrow no homework, but day after tomorrow you have to complete all the questions after 110. So please make sure you complete them today itself. Is that clear? Any